Good morning, everyone. So yesterday, towards the end of the class, we have started. Correct. Now we got into what is the basic of asset. Correct. Asset we have completed. Asset definition I'll take you through once again. Then we'll directly go to liability, equity, income, expenditure, and derecognition. That is a small one, but since they asked one time, let's see. One line will be there. That's all. Nothing else will be there. Okay, so what is an asset? Asset is a present economic resource. What is it? Present economic resource controlled by the entity arising from the past event. What is economic resource? Economic resource is a right which has a potentiality to get the future economic benefits. Or money is going to come because of this right. I'm going to get the money. Correct? Na? That's all. That is what economic right or whatever resource basically. Right, this is tangible, intangible, legal ownership is not must, correct? Now, hire purchase or lease is the best example, right? All that. Right, arising from the past event. Past event means you must have done some barter or something, correct? Now, you must have paid and purchased. You must have purchased another company as a whole. That's why you got this correct? As part of amalgamation, you got the asset. As part of government grant, you got the asset. Can be correct. Now, assets can come from different angle. It's not only purchase and it's not only the other way around. Correct. I'll be able to use economic benefits means money or money's worth. How do you get the money? I'll get the money by selling, by using, by barter. So many ways are there to get the money, right? So I'll just go back 1 second. Right. So that is asset. Now let's go to the liability definition. In case of liability definition, there is no change from what you have studied in accounting standard level. Okay, right. So that much is not a change. Just a second. Yeah. So what is liability? Liability is a, like how you said, like present economic resource you told there. Present means what we understood. Present means it is there as on 31st March, correct? As on the balance sheet date. Same way here also, it's a present obligation. Yeah, this definition is obviously every definition is important. This definition exactly correct linked to your IND AS 37, which is accounting standard 29 provision. Correct. Na? What is a provision? Provision is a liability. First the sentence will come, provision is a liability. Correct. Na? In accounting standard, we will say measured by significant degree of estimation. Here we will say it's a liability of uncertain amount or timing. Correct? I said they will close it. What I say? It is liability of uncertain amount. Correct. Na? We don't have exactly certainty how much I am going to pay. Do you know provision means? Provision do not have the exact precise amount. I don't know. Timing, when do you pay? God knows. Correct. Na? Suppose some case is there. I made a provision. When do you win? When do you lose? How do you know? Right? You don't know. Warranty provision is there. Correct. Now, warranty provision, when do you pay? When will that guy come? When will he get a problem? Then he'll come. When I give a warranty for 3 years, 3 years may anytime he can come back. Okay. So I'll just go back. So present application. First, present application means we have an obligation. Obligation means what? Is it a choice? No, it's not a choice. Obligation is mandatory. You have to clear it. Correct. Na? Right. You don't have a way to, alternative way to close that obligation is not there, obviously. Right. So there is an obligation, mandatory, that has come how? That may be a contractual obligation, that may be a legal obligation. Correct. Now, that may be a constructive obligation. What is constructive obligation? Have you heard this word? Right. This will come only in IND AS. AS में नहीं आता. Okay. It won't be there in IND. It won't be there in AS. It is there only in IND AS. Okay. Right. So constructive obligation. Constructive obligation, I'll define that anyhow. It's like we are doing on our own. It's self-binding in simple words. What did I say? Self-binding. How do you do self-binding? How do you bind self like this? No, no. Then how? Self-binding happens by you committed to deliver. Maybe not contractual. Contractual, I have not written anything on the paper. But because of my practice, I do it. It was not written anywhere, but still I do it. Are you getting my point? Then it is binding only. It binds because since you did for all these years, now can you can if you want you can say I'll come out of this, you can say, but still you will not do it. Why you will not do it? If you do it, it will be at the cost of goodwill. Correct. Now people must have trusted because you do it. करके everybody you do it like this. That's like that. Everybody is already believed, trusted. Correct. Now you cannot come out of such circumstance. I'll tell you. I'll give some examples of this. Right. Let's look at the definition once again. It is a present obligation arising from past events. Yes. See, if your company says I am liable, how you are liable? You are liable for what? Suppose loan you have taken. That's why you are liable. When you will become liable for loan? When you enter into agreement or when you receive the money. You understood? Loan sanctioned on 1st January, but loan disbursed by bank on 5th January. There can be a date difference. Right. Now, which date you are liable? 1st January or 5th January? Question clear? Huh? I repeat. 1st January loan sanctioned. 5th January money came to my bank account. Okay. Right. Now, which day I should record liability? 1st or 5th? Why 1st? Just because you entered agreement, unless until he pays you the money, are you liable to pay? Can he come on second and ask, hey, give me my money? Which money? Correct. Now, which money? First you give here, then I will be liable to pay you. Agree or not? So, till the money comes to my account, I'll not be liable to anybody. Agree or not? Yes. So, you will be liable to somebody. You will be liable to somebody only when the things come. Right? Yeah. I have a few examples for you arising from the past event. So, something past event has happened. That is a binding event. You have to settle it. What did I say? You have to settle it. Settle it in the sense either repayment can happen or give something else. Right. Suppose example, you gave goods to me. Do I need to settle it? You gave goods to me. Do I need to settle it? Right. How do I settle? I can pay the worth of money that in money. Can I pay that? Right. Or can I return the goods at least? Maybe required penalty also I'll pay. Agree or not? So somehow I am supposed to do. Okay, if not money or something, sir, same 20,000 worth of my mobile is there. If it is acceptable to you, can I give some other asset and close it? Correct, na? Or in the worst case scenario, I begged and you accepted that. Waiver. Correct? So somehow settlement is mandatory. Settlement is mandatory. So that is what it's like. What do you say? Past event. Past event is binding event. You have to settle it. You don't have a choice here. And that is the like past event is the triggering. Correct? Na? Past event occurred. That's why I became liable today. You will not become liable just like that. Something has happened. That's why you became liable. Okay. Right. So let's look at the definition once again. All of you, please read it along with me. Okay. What is that? It's a present obligation arising from past events, on settlement of which expected future economic benefits outflow from the entity. Correct. Now, money will be flowing out because of settlement. Money or money's worth. Economic benefits means money or money's worth. Something or other will go out from my entity. Right. As we said, present. Present means what? It is there on the balance sheet date. Outstanding as on the balance sheet date. Obligation, which we spoke, it is a duty. It is not a choice. Correct. It is not a right. Agree. Right. Past events. What is past event? Past event, I said, obligating event. Right. Right. One more question. You ordered in Amazon on 1st January. Or let's say 31st March, you ordered some goods in Amazon. You got the goods on 2nd April. Okay. Assume a situation you paid already in Amazon, you did not pay the money. Both are okay for me. Are you getting my point? Right. So 31st March, assume first situation, I didn't make the payment. It is cash on delivery. Okay, your company is doing like this something. Just imagine some circumstance. Now, do I need to record a liability or not? Is the question clear? Shall I repeat? 31st March, you ordered in Amazon. Okay. Other vendor accepted. Okay, I'll deliver it. I didn't pay money because it is cash on the COD chosen. Okay. Goods came on 2nd April. I paid the money. I got the delivery of the goods. Done? Right. As on 31st March, since I am preparing the financial statements, do I need to make a provision or create a liability for this so and so worth? What do you say? No. Some people are silent. Silent means yes, sir. What do you say? Yes. Why yes? Because it is an expense today. How do you say? First, expense are the things are secondary. Liability, I am talking. Shall I make a provision means liability. So other second credit leg I am talking. Correct na? So are you liable to any person at this minute? Can Amazon call you and ask, "Ray, pay me my money"? Yes or no? No. Why? What do you say if they ask by mistake? Where are your goods first? First you deliver the goods, then you take the money. Agree or not? Suppose you gave already money. Now tell me. Since I gave, I don't have liability. But whatever you gave is an expenditure. Huh? No, it is advance. What is it? Correct. Na? You gave money. Advance account debit to bank. Right. What will bind you to settle? Not this agreement alone. Correct. Na? When they let them deliver the goods, that will bind me. Correct. Na? Once he delivered the goods, am I supposed to settle it? You have to settle it. Once they give the goods, do they get the right to ask you money? They get the right to ask me money. Correct. Na? Yes. Then liability comes into the picture. Till that time, no, actually. Okay, right. So it is an obligating event. Entity has to settle. There is no option to skip. No option. You have to do. Correct. Now, you ordered on 31st March. 1st April, can I cancel? Yeah, why not? Why not? Can I cancel or not? Still, goods are not delivered now. Once goods delivered, you don't have a choice. I mean, either you should give the return of the goods or you have to pay the money. You can give some other worth of it, or that is your understanding between parties. Agree? So that is more and more important. What is a correct? How do you know that we are liable to somebody on 31st March? First one is contractual liability. What is it? There is an agreement. Correct? Yes, implicit or explicit, whatever it is, there is an agreement. Or second thing, it need not be always contractual liability. Yesterday we spoke income tax liability. Is there any contract? No contract. But am I liable? Liable. Liable because of law. Correct? Na? Law. Legal liability. It can be legal liability. Gratuity payable. Contractual or legal? Legal. GST payable. Legal. All these, I mean, correct. Any tax related things is legal liability. It is not contractual liability. Agree? Any case, court told that you have to pay. Okay. Yeah, we went to court of law. There was some fighting between me and my supplier or whatever it is. Then court told Ravi, you only have to pay 1 crore. So now, is it a legal obligation? Is it a contractual? Is it a contractual obligation first? There is no contractual obligation, but it is indirectly legal obligation. Okay, not as per the law, but okay, equal to law. Court will consider that. I hope you understood. Yes. Next, sometimes expert opinion. What do I say? Expert opinion. Why expert opinion? See example, same thing. Like there's some case is there against the company. Okay, right. Are you going to win or lose? Do you know? I don't know. Is it a contract so that which will tell me? No. Is it something legal? Nothing. Allah also will not tell correct na, whether I will win or not. But it is correct now. I have difference of opinion. You say I am liable. I am saying no, I am not liable. Okay? I'm just telling like that. I hope you understood. So now what should I do? Whether I win or lose, I don't know. So that's why I went to a lawyer. Correct. Na? I asked based on the circumstances, facts of the case, situation, everything. Correct. Na? All right. Tell me, what do you feel? Are we going to win the case? Are we going to lose the case? It's an expectation of future. I can't expect properly. That's why I asked one expert. Expert told, yes, Ravi, most probably you will lose the case. That means I am assuming I have an obligation to pay. Correct. Maybe confirmation will happen at later point of time, but based on the expert opinion, I am considering I am liable because case is already there. It's going to come in the future. Already there. Correct, na? So then you are supposed to recognize a provision for the same. Correct. Na? That's why you will. What do you do whenever for contingent liability or liability? Whenever you are as an auditor, what are you supposed to ask? You'll ask what all the cases are there against the company. What is the status of the same thing? As per your lawyer, your correctness, so and so, who is handling that? That person should tell. If it is something big, then what do we ask? You ask to get the opinion. Agree? I will take the opinion. If he says, lawyer says, very less chances to win, then make a provision, my dear friend. Agree? Right. So expert opinion is also one reason. Next, events occurring after the balance sheet date, just hold it for some time. Next, after this, a few slides more, no, then I'll get into IND AS 10 only first. You will understand that is AS4 related equivalent standard, IND AS 10. Events occurring after the standard is telling that I am liable. I was already liable on 31st March. I was thinking I am not liable. I was not liable. But subsequent event is telling, no, no, you are only liable. How it happens, we'll see that little later. And the next one is customs or practice. This is called constructive obligation. This is a new word which will come number of places. Remember this word. Okay, what is the word? Constructive obligation. Construct, just for understanding, I'm telling you, self binding. What is it? Self binding. Okay, if you bind, right? Self binding means because of the practice it happens. It will not happen anything. One small example I gave, just have a look at it. Okay, just to get you understanding. Suppose somewhere nearby, one small shop is there. What he sells, only China products he'll sell. Okay, China products ko how many years you will get guarantee, warranty? No guarantee, no warranty. Once you cross the door, no, that's allowed. Agree or not? Suppose you purchase one bulb or one whatever it is, camera, you call whichever item you purchase. Once you cross the gate, you're out. Correct. Na? Something is working, okay, you're lucky. Not working, you're not lucky. That's all. Right. Now the question is, but what is that my practice all these years? Even though I don't get any guarantee from my China supplier, but still I am giving a warranty in the sense I have not written any piece of paper. If any customer comes and says, sir, I purchased something from you, sir, 6 months, almost 3 months, 4 months over, I'm facing some problem. Can you help me? When anybody is coming, na, I'm helping them actually. I'm getting repair, not replacement. At least I'm repairing it and giving it back to him. Getting my point? I did this for so many years. That's why somebody from Marathali also is coming to here. Why? He has one more shop next to his house only. But still he'll not go there. He'll come here. Why? At least 6 months I'll get a guarantee. Correct. Now something goes wrong, right? He's repairing. Agree. But has he given any warranty card? No, he has not given. Is it a legal obligation in the country? If you sell one product, you have to give something? Nothing. Expert opinion and other things will not work. Agree? Now tell me. Now, as on 31st March, or last 6 months, my person, correct, now my shop person has sold say 20 crores of sales. How many sales? Right. All this can come back as a warranty in the future. Right. Does he need to make a provision for warranty? Does he need to make a provision for warranty? Are you getting my point? Yes. Why yes? Why no? Both you should tell. Constructive obligation. Okay. But actually, see, logically, if suppose you purchased one item, I am the shop owner, you came with the problem. Correct. Na? I said, no, I'll not do. What is your option? Go home. That's all. You don't have option. Agree or not? Correct. Na? Can you go to court of law? No. Why? I never promised. Correct. Na? I never promised orally also. I never promised written paper only not there. It is not legal. You can't do anything. So can I step back? Yes or no? Then how is that last, this corner word binding will work? You understood my point? How is it an obligating event? I can say, sorry, my dear, I'm not doing this. Can I say that or not? Whether I tell, do not tell, secondary. Can I say? I can say. But will I say? I will not say. Why I will not say? If I say, that is a suicide. Correct, na? Yeah, obviously nobody will come from so far. Why so and so? Somebody from Maradhalli said from there to, I mean, little far place, 15-20 kilometers. He's traveling and coming here for what sake? For service, trust, goodwill. You call all these words. Correct, na? If you say no, that is going to be you are doing this the cost of goodwill. Nobody does at the cost of goodwill. Nobody does at the cost of goodwill. Correct. Do you need to make a provision? Yes. We can say, but we'll never say. Correct. Now, is it binding? Binding. How it is binding? Self-binding. That is called constructive obligation. Diwali bonus, sir. Correct. Now, Diwali bonus or something like generally. Bonus, tell me, are bonus to employees whose salary is above 21,000. Bonus to employees whose salary is above 21,000. Below 21,000, bonus act will attract. You are supposed to make a provision mandatorily. You don't have a choice. Are you getting my point? Right. Suppose my salary is 50,000. My salary is how much? 50,000. Now tell me, is it mandatory? Is it mandatory? No, it is not mandatory. Correct now. Employer can say, no, I'll not give you this year, no bonus. Can I say or not? But are we making a provision for bonus? You should make accrual actually. Why do you make? Because there is a practice now from the birth of companies till date. You have already given the bonus every time. Agree or not? What is that obligation? It is neither contractual nor legal. Correct? No, it is not a legal obligation. No expert, no event, nothing like that. But it is a constructive obligation. What is it? Constructive obligation. I hope you understood. Yes. Like how you have assets. What are the two conditions we discussed? Probable future economic benefits inflow. Next, cost or value can be measured reliably. Agree? Right. So same thing. Liability hai to. If it is liability, what are you supposed to do? Probable future economic benefits outflow. If it is a liability, future economic benefits will be going out from the company. Correct? Na? Yes, outflow. Plus, second one, liability, what is the cost? I have a loan of 1 crore. If I say, what is the cost of loan? You cannot use the word cost. Cost word is suitable for asset, not for this. Value also not correct. Correct. Na? If I ask, if someone says, I have a loan, what do you ask first thing? You know them, assume. What do you ask? How much will ask? Correct. Na? So the amount can be measured reliably. That's all. Liability it should be measured reliably. Cost or value words are not suitable for liability. I hope you understood that. Okay, it should be measured reliably. It should be measured reliably. Means how much? Suppose if you want to make a warranty provision, you should be able to calculate the warranty amount or not. Will you be able to carry reliable ways are there or not? Trustworthy ways, not ad hoc ways. Then please make a provision for that. If you say I can't make it, there is no measurement criteria, I'm not able to estimate it, then only disclosure will be sufficient. You cannot pass journal entry, ignore it. We'll discuss such circumstances in next standards because it's just the basic, not respective standard. I have not entered so far. Correct, no? Right. I hope you understood. Right, my dear. Now, just answer this already we spoke. Correct. Now, we ordered goods on 30th March, but we received the goods on 5th April. Correct. Now, shall we make a provision for 5 lakh rupees on 31st March? No. Why? Obligating event did not take place. Correct. Now, what is obligating event? Receipt of the goods is obligating event. That didn't happen. Correct. Now, we are not obligated to anybody till the date I receive the goods. Will not correct. Now, if you observe now carefully, if you go to any company or factory, something, will make provision for what? Goods have come, bill has not come. What has come? Goods have come, but bill has not come. Correct. Now, for that, we'll create the liability. Agree or not? But goods ordered, it is not still, it is on the way also, we'll record it subject to the terms and conditions. Subject to terms and conditions. Correct. Now, so I have got already liability. I am only shipping it. Got my point? right? If something happens on the road, it is my responsibility. Then record the liability, record the asset, both. Then goods in transit will record it. I hope you understand. Right. Otherwise, we will not record liability for that. Right. Answer me this one. Whether preferential capital is a liability? Yes, exactly. It depends upon, I told, as we already discussed, you should not go by preferential capital is liability na equity na. Nobody should answer that. You should ask for further terms and conditions of it. Correct. Na? Is it redeemable? Is it convertible? What exactly? Redeemable concept is not allowed in India, but convertible option is obviously there all the time. Correct. If you say redeemable, correct. Na? Are we liable to pay preferential capital? Assume, in my case, it is redeemable assumption. Okay, assumption you take it. If it is redeemable preferential capital, are you supposed to repay? Yes, you are supposed to repay. Then, yes, it is a liability. Ind AS goes by substance over form. We'll go by substance, but we'll see the terms and conditions carefully. When the terms and conditions says I am liable, right? We just don't care about the name. Capital is there. Yeah, whatever words you want to write, you write it, but I'll keep it under current liability only. I'll keep it under liability. I'll just go by the substance rather than the name, nomenclature. Is it clear? Can we go ahead? Right. So now equity. What is equity? Owner's fund. Correct. No? Right. See, some instruments will be there, my dear. It will either fully equity, it is not fully liability. It will be mixture. What it is? Mixture. That is we call compound instrument, we will call. What is it? Compound instrument. Such instruments are not there in AS. It is there only in IND AS. Example. Say, irredeemable preference shares, you take it, assume, just for example purpose. But dividend is mandatorily payable. What did I say? Irredeemable preference shares, but dividend is payable mandatorily. Now tell me, irredeemable is with respect to what? Principal. Principal amount, can I say? One preference share is how much? 100. Example. Okay. One debenture is 100. This 100 I will not pay. You also don't have right to come and ask me. But am I supposed to pay every year interest or not? Yes, I'm supposed to pay every year interest. So, to the extent I am not liable to pay, there is an equity. How much is the amount that we'll decide little later. Forget about the classification. Just understand the concept. Conceptually, try to catch it. Okay. So, in this instrument, what is happening? Principal is like irredeemable. Irredeemable means I don't have an obligation to pay. Can I say? When you don't have an obligation, then it is equity. Correct. But with respect to interest obligation, today I accepted 1,000 rupees or 100 rupees from you. Correct. Na? I have accepted to pay a future amount of interest. Agree or not? So, do I have an obligation to pay? And at the same time, I don't have an obligation to pay to some extent. So, what is this called? Compound financial instrument. There is an equity quality also. There is a liability quality also. Then, how do you account? In India, simple. We'll write one account liability or something, whichever you want, you will put it. Okay, but in AS it is. In days, no, you have to day one only, you have to bifurcate both and account for it. In Ind AS, you have to day one itself, you have to bifurcate. Equity is equity only, liability is liability only. You have to separate it and account for it. How do we do? Correct. Na? When the preferential capital is equity instrument, either equity instrument or liability. Correct. Na? Right. So that will be discussed under Ind AS 109. Because 109 yesterday we spoke, no? Like balance sheet, which are all coming. Yes, equity side capital also will come, loans also will come. Everything will be discussed under 109 in detail. How to bifurcate, right? And day one, how to record it. And the balance sheet dates, how are you supposed to record it? We'll see it over a period of time. Not right now. But just remember, there is one concept called compound financial instrument or compound instrument where equity element, liability element, both are clubbed in one instrument, right? Equity. What is equity? Equity is simple words, residuary interest. I can tell two ways. What is one way? Which is not liability. That's all. Can I say that way? Yeah. What is equity? Which is not liability is equity. Other way around, no, I want to tell what it is. Then residuary interest. What is this? Residuary interest in assets after deducting the liabilities. Residuary means assets minus liabilities is net worth indirectly. Right? What is that I'm going to get from there, what I'm liable to pay, that liability, if I reduce it, that's all. So assets after deducting the liabilities, which is net assets, net worth, you can call it. Okay, or leftover residuary means equity, means yes, equity share capital plus reserves and surplus or other equity, whichever the language you want to use it, you can use it. I hope this is, it is straight and simple. There is nothing much involved in this. Are you comfortable? Correct. But remember, these are the fundamentals. Okay, right. We maybe today or tomorrow will enter into one standard called IND AS 8. IND AS 8 is equal to accounting standard 5. Okay, yeah, but accounting standard 5 not equal. This is much higher level. But forget. Suppose some places what happens, no? IND AS will not tell what is the way to account for. Every circumstance it is not telling. Few circumstance they left. Few circumstance they left. Now, how to account? Then you have to choose your accounting policy. What you should do? Accounting policy will come. When you want to choose accounting policy, then it says refer asset definition, liability definition, equity definition, income expenditure, your whatever you wanted to account. You want to take it as an asset, then it has to satisfy asset definitions and conditions. Understood? There are so many places where accounting is not prescribed so straight. Left to you. Left to you means accounting policy choice comes into the picture. When accounting policy comes into the picture, what the standard itself says, refer these things. Okay, so that is that important for everybody. Income we saw already. Okay, right. What is income definition we spoke? Increase in asset or decrease in liability, ultimately increase in equity. Correct? Now, other than contribution by the owners. Correct? Yes, exactly. Other than contribution by the owners. Right. So it includes profits, gains, realized, unrealized. Correct. We spoke revenue. Every income need not be transferred to profit and loss statement. It should be as specified by the respective IND AS. Correct. This we spoke. I think we wrote also. Agree? Right. So let's go to directly expense. Expense is exactly ulta definition. Ulta definition you tell. Try. Decrease in asset or increase in liability. Ultimately decrease in equity. Correct now. Ultimately decrease in equity. Other than not contribution is for the income. Withdrawal means distribution. Contribution that side, income side, distribution this side. Other than distribution to the owners. That's all. Other than distribution to the owners. What is distribution? Dividend distribution. Not only dividend distribution, even buyback also. Buyback also is distribution of equity. Correct now. Again, remember one word all the time. Any transaction with respect to owners. Transaction with owner will not touch profit and loss statement. Is it clear? What did I say, my dear? Any transaction with owner will not touch profit and loss statement. That much you remember. It will not come to profit and loss statement. Hope you understand. Right? Right. Answer me one question. Just for detailed discussion will happen at later place. Okay. I issued my shares. Share issue expenses will be there. Yeah. Correct. Na? Even for private company also, are you supposed to pay for authorized capital? Authorized capital increase will go somewhere. Some other expenditure I will be paying. Now what should I do? Share issue expenses. Shall I charge to P&L? Just now we told transaction with owner should not do. But it is to get the capital only, na? Isn't it this expense incurred for getting the capital? It is not to get the loan. It increases the share capital. Issue the shares, I am telling. My capital will be 100. Correct. But what is the point to transfer? What is the point to transfer it to profit and loss statement? Is it your operating business? Not at all. Is it directly or indirectly incidental to your business? No, you cannot say that also. Agree. So in right. Huh. So share issue expenses. Share issue expenses. In accounting standard also, what are you supposed to do? You are not supposed to under whichever it is, you are not supposed to transfer it to P&L. Authorized capital increase or increase scale, you have the whatever the expenditure you incur, it has to go to P&L. There is no other way. Authorized capital, you are increasing. Okay. Are you supposed to pay some money to MCA? Huge money you are supposed to pay. Correct now. That will go to P&L. There is no option. Right? So assume IPO. I'm going for IPO. IPO expenditure also no different. The share issue expenses are little, I mean, what do you call? For drafting the MOA, correct na, AOA, or and for incorporation expense will go to P&L. Right? Only the share issue expenses, whatever I'm trying to refer, the brokerage, especially brokerage expenditure, assume. That's the best example. Okay, right. Otherwise, underwriting commission. Can I say that? Right. Underwriting commission. Better. Yeah, underwriting commission. Where do you put this underwriting commission? Any idea? Yes, online students also can write something. Underwriting commission. Where can it go? This can go to only miscellaneous expenditure as other non-current asset. Other non-current asset may it can sit. Underwriting commission paid. It has to go to miscellaneous expense. Miscellaneous expense is an asset. No, don't go by the expense means expense. No, no, it is not expense. It is a balance sheet item. It is a balance sheet item. Right? It will be capitalized. Right. No, no, sir. I have a share. Correct. Now I have a security premium. You have security premium. You have a security premium. Then what do? You adjust it. Yeah. Where do you adjust it? You will be adjusting it in SOCIE, statement of changes in equity. You will be adjusting this. Are you getting my point? If you have security premium, then what do you say? Bank account is gone. Security premium is debited. Security premium account debit to bank account. You paid some money, right? That's what. No, I don't have a security premium in my balance sheet. Then it will sit under miscellaneous expense. Other non-current asset it will come. Yes, please. There is no way. That is what wrong actually. It is not an asset, but accounting standards may there is no proper way. Right. I'll tell you the correct way. Correct way is this way, but I cannot do it under this one. Under IND AS, what are you supposed to do? Always it should go to security premium. If you don't have security premium also, it should sit as a negative number. Or you can adjust it with retained earnings over there. Okay, right. It will be debited to equity. Yeah, debited to reserves and surplus in simple word. If you have security premium, first priority, obviously, like how we are doing it here, first priority will give it here. Right. Even if it is nothing is there in my correct now, my nothing is there. Yes, you can write negative number also, but it is not an asset. Yes, 100% what he asked the question, perfectly right. But I don't have a way in accounting standards, but I have a very strict and very clear instruction is given under IND AS. It is related to share capital to get the capital. Correct. Now, I don't want to put it in profit and loss statement under any circumstance. Right. It can be adjusted with another capital element. Security premium is also capital element. From there, you reduce it. If security premium is not there, then at least show negative also, but don't take it to P&L. That is what very clear instruction from IND AS 109. This is also from 109 only. Is it clear? Right? Yeah. Chalo. Next, let's go to yeah. This is one small point. De-recognition. When do you de-recognize? Come out. Tell me generally. De-recognition means what? Recognition means what we told, my dear. Recognition. Recognition means recording in the books of account. Correct, na? Recognition means recording in the books of account. De-recognition means exactly ulta. Recognition means removing from the books of account. Can I say? Yes, removing from the books of account. Tell me, when do you remove asset? Asset? and liability. One second. Hmm. Sorry. When it is sold, we will de-recognize. Okay, done. Next, any other way? When there is no future economic benefits, correct? Na? Right. That is one way. Next, instead of sold is fine, 100% perfect. I'm okay with it. Instead of, can I say, when you lost control over the asset? Agree? Correct. So when we say when we lost control, when we lost control over the asset, de-recognize it. Or when you are expecting no future economic benefits, no future economic benefits inflow. Correct. Say example, you have got some intangible asset. It's useless to you. I cannot sell, nobody will buy. You got my point. You got some old software. You spend so much, and there is some still undepreciated or unamortized balance is still sitting in your balance sheet. Are you going to use it? No. I got now SAP, Oracle, something I got it. Right. Can you sell this to somebody? Nobody purchases. Right. What is the worth of it? Zero. Correct now. Then remove that asset from the balance sheet. De-recognize it by excess depreciation or whatever the word you want to talk, and just remove it from the balance sheet. Can I say that? Done. So when do you say liability is de-recognized? Why am I asking you? Suddenly such point will come in the exam. You expect 10 marks bouncers will come like that. You make up your mind. It should not come. I also pray for that. Okay. Right. But things are not under your control or my control. Agree na? This much. Right. 10 marks, you have to make a provision here. Right. Suddenly something can come. And so just generally start thinking. Generally start thinking. So they use the word like some student told. Sir, you taught recognition, you did not teach de-recognition. No comment further. You understood? You think, no? De-recognition of PPE we taught. De-recognition of intangible asset we spoke in. Obviously, we'll speak that is one separate heading under accounting standard 10 or IND AS 16. Accounting standard 26 or IND AS 38. De-recognition we will discuss, which will be there in my slide, obviously. Can't you catch some lines from there and put it? Do you need separate heading for that? I hope you understood. Little bit. Sometime what happens, some bouncer can happen. But first only never ever try do research and development with respect to bouncers. Okay, right. First question you saw. Very difficult question. What you should do? Go to next question. That's all. Forget. Correct. Now this is set off with my provision already. Right. This is provision number. Forget. You should go to correct now. See how much you want first. That you take no. You try for that first. Anything comes above 80, bonus. You enjoy. Correct. Now, otherwise, if you don't go with this mindset, now it will be they will play with your mindset. They will play. Okay. Very, very dangerous for you. Okay. Somebody is asking, Srivatsa is asking, that underwriter is not matching with the asset conditions to recognize. Yes, I told. No. In accounting standards, strict rules are not there. Even though they wrote definition over there, they will not match 100% with it. That is the problem. That issue will not be there in IND AS. IND AS may everything will be same way. Agree. Some student told me, um, what is that? Unrealized income will not recognize no something. Conservatism, some rule. Okay, one small question I'll ask you. Accounting standard 11, you know? Forget, you don't know, assume. Right. Foreign currency debtors, you know? Foreign currency debtors. Do you restate or not? Correct. You will restate. You restate, say you got a gain. Assume you got a gain. Where are you transferring? P&L only, na? Debtors restated. Are you getting my point? Earlier you recorded 85. Now it became 90 example. If 5 rupees will go to P&L or not? Is it realized gain or unrealized gain? Right. Where is it going? P&L only. But you studied somewhere in the past, no? Conservatism, unrealized profit should not go to P&L. Where is that, my dear? There are nothing like that. Those are all general sentences. When it comes to standard, whatever told by the standard, that is specific, that is correct. You have to follow that. Like that, so many places may unrealized also will recognize. Don't stick to the original things. When nothing is clear in the standard, then you should go to basic. Have you got my point? When should you go to the basics? When nothing is specific, nothing is given, then I should stick to the asset liability definition, etc. When something is told clearly in the standard, no, nothing is applicable to you. Clear? Done. So, liability. When do you say liability is out? When it is settled is one when it is settled. Correct. Or when it is waived off. Can I say that way? Yeah, that's all. That's all you need to write. For this 1 mark, for this 1 mark. Seriously, it's one mark. Because ICI material may also, it will not be more than this much. What is there in ICI material? I'll show it to you. Na? This is what sentence written. When entity loses control of all or part of the recognized asset. When the entity no longer has a present obligation for all or correct or part of the recognized liability. We can use one more word, extinguishment of right. Third one, you can use another word, extinguishment. Correct na? Extinguished. Yes, I am no more liable to anything. Liability is extinguished. That means settled somehow. Either settled or waived off. Agree? That's it. That is more than sufficient. That's it about the basics, my dear. Shall we get into a next standard? Right. As I already told you, informed you in the day one, right? Material, right? See what you do. I request you actually, not I'm leaving a choice to you. We have material already given, right? Online students must have got it, right? You take some time, half an hour or 15 minutes time. Today we'll do one standard. Next 10 days continuously do that. I say material also you keep it. At least soft copy will be there. Correct na? Whether all the concepts have I covered. Concepts to 100% I'll cover with no doubt. Questions also covered or not, you check no. For 5 standard, 10 standards, your patience left to you. Correct na? Will you get comfort? But later again, every day don't check. Correct na? Once you get comfort, okay, some standard, 10 standards I want to check. Check no 10 standards. No, I want to check all 35. Check. But don't get the last minute before exam na. Don't ask all these things. Got my point? And again, one more request. Request. This is request. Now what I'm telling. Suppose somewhere I'm going little faster, or you did not understand some concept. Correct. Now, if you give me this your feedback after 75 days, it is useful to next batch. Agree or not? It will be useful to next batch. Correct. Now, today you did not understand. Today, if you tell, at least I'll recall it. Correct. Now, tomorrow first only I'll recall it. I'll clear it. Agree or not? Yeah, I know your intention wants to help to other students also, but first you get help. No, got my point? Tell me whatever the point, no, you did not like, wherever the problem is there, immediately if you tell. Otherwise, you can come and ask me, sir, can we do little more sums? What's wrong in this? Is there anything wrong? Correct. Now, any teacher will feel that wrong in this. What is wrong in this first? I don't understand. Correct. Now, sir, we solved only one, two sums. Do you have another sums? Agree? Right. So you please feel free to ask. Don't try to give me feedback after the say full complete course. That is useless feedback. I hope you understand. Right. Better you ask me then and there. I'll try to clear. I'll also feel comfortable. Got it? Right. Chalo yeah. Let's go to hmm, Ind AS 10. I'll start. Then Ind AS 37 provisions I will do. Then I'll come to Ind AS 8. Or I'll change. That is that minute my mood. Okay. Everything will work. That's why. Ind AS 10. Yeah. You write the heading Ind AS 10. Frequency of this standard, no? 30%, one third. You write somewhere. Frequency one third, 30%. Means 3 attempts, one time it can come. Once in a year, correct. Because 3 attempts now. right? Is it three attempts means frequency is low? Then why are you starting with that? Because interlinked, highly interlinked subject. Wherever you go, events occurring after the balance sheet date, that word will come. If you don't know that word, if I go forward, na, then you will everywhere I have to come back to the standard. That's the reason I will take first IND AS 10. Provision. Provision will be there everywhere from top to correct. Na? The liability, very important standard. Frequency is high, low, same approximately, same 30-40% is only the that one also, but important. Important to understand some other standards. That's why we will do that way. Fine. Right. Chalo. Let's go to right. This is what is the difference between accounting standard 4 and IND AS 10? Actually, nothing except one disclosure. Everything remains same. Everything remains same. Okay. What is the I mean additional things? Yes, the questions will be little high level because CA inter level is different, CA final level is different. That much is the difference. Okay, right. We'll go little deeper. Obviously, very much required. Events occurring after the balance sheet date. Right. So here, after the balance sheet date, yes, this is a very small example. You don't need to write it. Correct? Huh. So March month salary was not provided by my accountant. March month salary was not provided by my accountant. But he realized when he is paying the salary, they'll pay salary on 5th of April. While making a payment, he realized. Correct. I forgot to make a provision only. Got it? Now, what is he supposed to do? Sorry? 31st March, what should you do? Liable to pay. Create a liability as on 31st March. Correct. Now, backdate entry, you should put it. Yes or no? Can we put backdate entry or not? Yes, you can put. Till what time? Till board of directors approve the financial statements. Correct. Now, till the board meeting is done. Can't I say? Board of directors approval means where do they approve? In the board meeting only they will approve. Correct. Now, till board meeting completed, can we change backdate entry? Can we pass? Yes. 100% you can pass. What are you supposed to do? Nothing to do. You should not record it in April 5th. It is not related to next financial year. It is related to last financial year. Correct? Na? Right. So that's why you have to go back and record it and close it. That's all. That is very simple. If you are using Tally or some other Zoho or some other software, what are you doing? That is only we are doing. Agree, na? Right. Entire books only they'll start only some individuals and some people enter books only they'll start after 31st March. Correct. They'll come with what is that? Bank statements. They'll come with the bank statement. Now you'll pass journal entry. Then what is wrong here in one entry you want to pass? Correct. Na? Right. So obviously nothing wrong. You do it. Yes. It is 100% correct. Na? As on 31st March, a salary expense account debit to salary payable, you will record it. When you make a payment on April 5th, payable to bank, you will record it. That's all. This is very simple, straight, which is obviously not level. Events means which event? Events means only significant event. Right. As I told you already, day one, IND AS is only applicable for material items. We don't need to account so seriously for every small transaction. Not necessary. Not necessary. Not necessary. Okay. Right. Have you heard of Kane's company? Hmm. Mysore based. The share was 7,000 and odd. Now it is available for 3,600. 50% discount. Right? Yeah. Here, what has happened, disclosures related to related parties. Material disclosures. Not small disclosure. Material disclosures only missing. Not there in the related party disclosures. Kotak Mutual Fund had invested into that company. Right? So then they commented. They gave their report. Your financial statements are not in line. You have made lot of disclosure. Correct. You have made lot of transactions are there, but all these transactions are not presented correctly. One hit, you understand? 50% discount, share price. Struggling still to 3,600, 3,500 struggling. I also have few shares. Very few. Less interest. Got my point? Yeah. Where is 7,500? Where is 3,600? You can understand that. Right? Right. This is ulta what they have done. What I was telling is for what? Material items ko you must follow. Their material items only not followed. Got it? Right. When you try to focus on every small thing, no, some material thing only will forget. Right? Remember, material things only will follow. Events occurring after the balance sheet date. Right. Chalo. Balance sheet date is 31st March 2025. I'll take it in my all examples. Then, right. Till which date, my dear? Till board of directors approval or audit committee approval. Board or audit committee. My company has both. Correct. Now, generally, what is the sequence? First, audit committee approves, then it will come to board. Do you agree? Correct. Which date I should consider? Board means board, not audit committee. Audit committee is a subcommittee, small part of the board. Agree? Right. Board means board because they can tweak there. I hope you understood what I'm telling. So board's approval of financial statements is important. You write somewhere there only. Audit committee, you write it. You write it with your pen. Next to this here, I'll also write. Yeah, here audit committee, you write it. No, audit committee approval. No, some supervisory board. They will create new words. Okay, supervisor. I'll write it here somewhere. Okay, supervisory board. No, board is board. That's all. No, other than board, anybody, audit committee or any other new words or fancy name they created. No, sorry, it will not be. Board's approval is important. Okay, board's approval is done. Till that time, board of directors, correct na? Once board approval is done, that means books of last year closed. Till that time, books of accounts of last year are still open. Agree? Right. So no more journal entries will take place once after board of directors have approved the financial statements. Is that simple and clear? Can we go ahead? Right. Chalo. So now next point. Yeah, here 24-25 is the financial year, correct? 25-26 is the next final. Right now whatever is continuing, I told like in this I'm taking 24-25 as my financial year. Okay, right. So what are they talking? Events occurring after the balance sheet date, they're talking. So events occurring after the balance sheet date means after 31st March, and they said like till the date of board of directors. Okay, board of director books closed means board of directors approval is happening on 31st August. So the events occurring between which two dates? 31st March to 31st August. Agree na? So the significant events which are taking place in between these two are going to be classified into two. Correct. Now, what are those two? Adjusting events. This is not new, ma. This accounting standard 4 and IND AS 10 almost same. Okay. Nothing new I'm going to add except some questions made. In questions, you will see little bit advanced level you will feel. Other than that, I cannot add one line extra. Okay, that's all. Just make up your mind. It's easy. One you will feel like one standard is over out of 35 standard. That's all. Nothing else. Right. Adjusting events and non-adjusting events. Yeah. What do you mean by adjusting? Adjust means simple. Adjust in 24-25. Can I say simple? If it is adjusting event, what should I do? First question. If it is adjusting event, I'll adjust in. Yes, I'll adjust in 24-25. Sir, if it is non-adjusting, we'll record it in 25-26. Agree? Right. So that's all I also have written. Adjusting events. Correct now. We'll record a backdated entry. That means 24-25 impact is going to be there. If it is a non-adjusting event, we'll not go back. We'll record then and there. Then and there means you are already in 25-26. So it will be recorded in 25-26. Correct na? Right. Yeah. This is something important. Right. In your accounting standard, correct, in accounting standard, non-adjusting events, now we used to disclose it in the board of directors report. Where we used to disclose? Board's report. But as per Ind AS, if it is non-adjusting event also, it should be disclosed in the financial statements. Where are you supposed to do? Right. And that's why I've written clearly. It is not in the board's report, my dear. It is in the notes to financial statements. You have to record it. You have to disclose that information, not recording. Disclosure. Disclosure should be given in the notes to financial statements, not board. AS4 says board. IND AS says, right, notes only. Fine. Right. So, what did I teach so far? The events from the 31st March to the board of directors approval date. Out of this, the significant events we can classify it into two. One is adjusting event, the other one is non-adjusting event. Now, I did not tell you what do you mean by adjusting event so far. I just told you what if it is adjusting event, we will adjust in 24, 25. If it is non-adjusting event, it will be adjusted in 25, 26. That much only I told. Is that clear? Right. Can I go to next slide? Perfect. Now, yeah. So if it is adjusting event, now I am telling what do you mean by adjusting event? Correct. Yeah. Just a few seconds, just hold it. Don't write it. I'll give you little time. 1 minute, you copy that time. Okay, na? Right. Nothing to worry. Yeah. Go through this because in the entire standard, na, this slide only important. Rest all examples only will come. If the standard, na, if you put it in A4 size paper, A4 size, you'll, 75% you'll utilize. Entire standard sentences are 75% of one paper, one page. Sorry, not even paper. Got it? Huh. So if you understand the crux of the sentences, you are done with the standard. Exceptions is there. I am telling that also another 2 lines exception. Nothing is there. But lot of examples required to digest correctly. Very dangerous standard, one angle. Confusion, correct. Only two are there. Yes or no, no. Correct. Now, if it is this, then is other than that. Correct. Very, very dangerous. So better. What is arising event? Sorry, adjusting event. These are situations or conditions which are there already on 31st March. Which are there already on 31st March. Getting my point? But what is the event? Event means not something new. This event is telling subsequently whatever the information you have got it, that information is giving a clarity or more information about those events or those circumstances or those conditions which were already there on 31st March. I repeat once again, right? What did I say? The subsequent events are giving more clarity about the events of 31st. It is not a new event altogether. No, it is giving me information of which is already there. Right? If the situation is created after 31st March, then it will be non-adjusting event. Right? So let's read. What is that, my dear, all of you? Situations or conditions exist on the balance sheet date, and events occurring after the balance sheet date give more clarity or information about which one, about the, correct, na? About those situations which were already there. Right. Yeah. This point, whichever I am talking significant event, a significant event can be favorable, significant event can be unfavorable. Yeah. One time one question was asked. We made a provision as on 31st March, expecting we will lose the case. What did I say? We made a provision, expecting that we will lose the case. In May, we have closed the financials in October, not October or whatever it is afterwards. In May month, we got judgment, favorable judgment we got. What is that? Favorable judgment we got. That means we were no more liable to pay. Now what should I do? Shall I reverse the provision what I created on 31st March? Or no, don't. Shall I create in the next year? Reverse it. Rule is rule for all. Correct now. Whether it is for favorable circumstance also, this is applicable. For unfavorable circumstance also, this is same applicable. Hello, understood? Correct now. Whether you won the case, yeah, if you had already made the provision, reverse it. I didn't make the provision. Nothing is there to reverse now. Correct now. Right. You did not create a provision. Subsequently, you lost the case. Now, what should I say? Create a provision because whatever you were assumption that you will win is wrong. That subsequent event is telling you whatever you thought earlier was not a correct assumption, was not a correct opinion. Do you agree with me? Right. So it is applicable for both. This is very, very, very important. Suddenly some doubts will come in exam hall. Correct now. So make it very, very clear that when you're writing it. Next. So this is it is giving more information or more information or more clarity about those situations or conditions which were already there on 31st March. That's the first point. Then next point. What is next point? Non-adjusting event. There is no situation, no condition as on 31st March. It's purely coming out after 31st March. Correct now. So it has no link to previous year. So then it is going to be purely non-adjusting event. If non-adjusting event is a material information, like amalgamation, I purchased another company in the month of April. I purchased another company in the month of April. Does it has any link between 31st March situation to this? Nothing. Correct now. But acquisition of another company, is it a material information? Useful for the users or not? Very much. Disclose it in your financial statements. Restructure of the company, demerger has happened. Demerger also not a small information. But decision has been taken in the month of April. Demerger also happened subsequently. All that circumstances happen after 31st March. Correct na? Then you are supposed to disclose because it is a, yes, exactly. Got it? Materiality, very important, that much. I hope you understood. Right. One small example I'll continue. I'll give you time to copy, nothing to worry. Right. Very, 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 very simple example. Same example is there in your ICA material also. It is there in accounting standards, that level also it is there. It is same thing. Okay, nothing new. Just observe. In January, we sold goods to Mr. X. Okay, in January itself. For worth of 5 lakh rupees goods we sold. Correct na? That guy did not pay me till 31st March. So if I prepare a balance sheet, yes, Mr. X is a debtor, 5 lakh rupees receivable, debtor trade receivable. Correct na? 5 lakh rupees is sitting on 31st March. Right. So subsequently, what is subsequently on 30th June? Right. 30th June, what has happened? We received information saying that Mr. X became bankrupt, okay, insolvent, money will not come. I have not closed the book so far. My closure of books always 31st August. Okay, just take it in your mind. 30th June itself, I got an information saying that I'll not get my money back. Right. So why? What has happened? Correct now. If somebody is not paying, what happened? This guy is a good guy, is a good customer to me. Next general question will come. Correct now. What happened? Yes, that so and so person gave me information. Some fire accident happened in his premises, customer premises. He lost everything. That's why he had to go for insolvency petition, whatever it is. He became, close bankrupt ho gaya. Understood? Right. This is the information, yeah. So now your books are closed or not closed? Not closed. So are we supposed to make a provision for doubtful debts, you call? Shall we make it as on 31st March 25 or next year? Right? My question is, shall we make a provision for doubtful debts as on 31st March 25? First, is it adjusting or not adjusting? Adjusting, non-adjusting. Shashank is saying adjusting. Others here also mixed opinions are there. Adjusting and non-adjusting. Both answers you can hear, no? Right. Why adjusting? Event already there. What is event you mean? Sale is not event. Receivable, correct. Right. Okay. Once again. I'll continue with this. Suppose we'll just prepone the fire little this side. Okay. I have not closed the answer. Correct now. Just I'm adding one more question. We'll close together. Done. Assume fire happened in the month of March only. I sold in January. Fire happened in the month of March, but still I was not aware of this. This incident I was not aware. Whatever happened in my client premises, I don't know this. Subsequently, on 30th 6, all other information same. 30th 6, I got information from somebody. A so and so person has become insolvent there. Okay, then I understood. Oh, I'll not get this 5 lakh rupees. Huh? Now adjusting or not adjusting? Now all of you adjusting? Earlier, whoever told adjusting, now is it non-adjusting now? No, no. Correct. Are there a change in earlier answer? Still, that is adjusting. Right. First thing, listen carefully. Balance sheet should talk about conditions as of balance sheet date. Correct. Now, if the new condition comes after 31st March, that should go to next year. Agree or not? Right. Now, in this circumstance, as on 31st March, whatever you are seeing, first example number one only I am talking. Is it clear? Right. As on 31st March, whether my ex customer is a good customer or bad customer. Was it receivable, not receivable? That means condition of the debtor, condition of the debt. If I say condition of the debt or debtor balance, is it good or bad? Correct, na? Then that only should reflect, no? Huh. Whatever has happened subsequently, that is pertaining to next year. Suppose if I had just one just imaginary question. If I had closed the financial statements on 30th 4, if I had closed the financial statements on 30th 4, what you would have done? Correct. You signed saying the good debtor. Yes, it was good on 31st March. That only should reflect. See, my balance sheet cannot be horoscope, no, my dear. Which will talk about future. As on 31st March, no, still just because it is not approved, I cannot take all the things of next year, I cannot bring it to my financial year. Okay. Your question, situation, condition, what I mean to condition of the debt. Debt condition, is it in receivable, not receivable, good or bad? That much only is called condition. Okay. Condition, was the condition bad? No. Was it a good condition? Right. So it should be presented as good condition as on 31st March also. So this 5 lakh rupees provision for doubtful debts should be placed, should be accounted for in the next financial year. You should not go back. Is that clear now? Any question? Online? Done. Now, what about the next example I said? Next example may now tell me. Here, fire happened in which month? March month. Correct na? If you were aware of this, you must have made the provision as on 31st March itself. Was the debt doubtful as on 31st March itself? But only information came later. Agree or not? Delay in information, but actually situation position was already bad of my debtor or debt. Agree or not? So now, when should I book the provision for doubtful debts? 31st March 25 only you are supposed to book it. Is this clear? Right. This is where generally problem comes. That's why more examples are required for this standard. Otherwise, you will not come to a perfect conclusion. More and more if you discuss, yes, that's more that will give a clarity. Are we supposed to? Yes, it was already doubtful. Information should give the information of the condition. This cannot be a new information and this cannot create a new condition. Okay. Always remember, balance sheet should talk about the position of 31st March only. At any cost, balance sheet should not talk about the future. Should not talk about the future. Correct? Now, future may you got information related to the condition, I'll consider. Otherwise, no. Hope you understood. Right. Can you take the first slide? What if we did not know that there is a fire? Correct. Now, then you must have closed the books without making the provision only. Whenever you get to know, that time only you are supposed to make a provision. Obviously, when you get the information only, then you will record the journal entry. See, but practically what happens if something is not receivable for 6 months or something? If it is a big company, na, marketing people must have already inquired. Somebody is responsible for collection also. Correct. Na? They should have asked. They should have got the information. Yes, it can happen in some circumstances, as you said. If it did not get information, means what can I do? Tell me. You have to close without provision. Next year, you will make a provision for doubtful debts. That's all. Right. Other example, you can say if the same thing happened on descriptive, don't write everything correct now because matter is everything is same. See, whatever I give in the slide, na, that itself is a summary. Agree? If the paragraph is there in ICA, no, one page, the same example, one page they explained. One page reading time will take a lot. But here, this slide reading, very less time. Correct, na? Just like that, you can, the minute you see this diagram, na, you will get to know. Okay, yes, sir told this is June month, May fire accident happened related to customer. Everything is one picture made is there. It will take lesser time. So my request, suggestion to you, make note of everything. Then before exam, you will not do again correct na. Suppose something today you missed one slide. I'm sending you within 1 hour the slides, everything I am giving it to you. Correct na? Fill it immediately. Don't accumulate that information. If you accumulate the information, na, when you have some 3 months or 4 months of time for study, that time you will, I don't know whether you will fill the gaps or whether you revise the subject. Correct? You will be confused. Right? So take a right decision. That will be good for you. Right here, you write simply what is that? If the fire accident happened in March and that March month word you mark it properly. Correct? The fire happened in the month of March something. Under that circumstance, what are we supposed to do? Yes, the condition was right. As on this sentence is required. Condition as on 31st March itself was already bad. We got just information about the condition, right? So it is adjusting event. You need to make a provision as on 31st March 2025 itself. Done? Can I go ahead? Okay. Right. Chalo, let's go ahead. Fine. So now another example which is required. In January, we received a demand notice. Correct. Demand notice. Demand means it's not a show cause notice. Show cause means what? Show me the cause, why can't I tax you? Correct. Na? I want to tax, show me the cause, why I cannot tax you. If you show the cause correctly, then they'll not tax you. If they don't show the cause, then they'll send another notice called demand notice. Correct. Na? Demand notice aa gaya. Already demand notice has come saying that no, you have to pay tax, GST, whatever it is, 5 crore rupees you have to pay in the month of Jan. Right. What did you do on 31st March? As on 31st March case is what? I already went to court. I'm not accepting their demand. Nothing wrong. Right. And correct. Now we asked our lawyer. Yes, nothing wrong. We must have appointed some lawyer. Lawyer told Ravi 70% chance to win. Super. Right. That means there is a 30% correct. And that's why what I went by lawyer. He's expert. So I did not make a provision according to his opinion. Right. But what has happened in the month of maybe whatever it is, 31st May, before closure of my books of account. Right. What has happened? Judgment came out. So now judgment is not favorable. Correct. Unfavorable to the company. What is it saying? Nothing doing. You only have to pay. Agree. Right. So is it adjusting event or non-adjusting event? Yeah, anybody saying non-adjusting? Case already was there. You have taken a decision saying that we will win the case. Subsequent event is proving that whatever you took the decision is not correct. Agree or not? Right. My understanding was wrong. My expert, we thought somebody is expert. That guy is not expert now. What to do? Tell me. Correction. I went by lawyer. Whatever he told, maybe he wanted some fees or something like that. That's why he told first positively. Correct. Now he collected his fees. Now negative information has come. Doesn't matter. So whatever our judgment was not okay, that was proved by the subsequent event. Correct. Are you supposed to correct ourselves or not? Yes, you are supposed to correct. Yes, judgment is correct. Na? Judgment, I mean, whatever this judgment is proving that lawyer's estimation was not okay. Correct. Na? Right. It is an information of the condition already. We were already fighting. Right. So this is adjusting event. That's very straight and simple. Hope you understood. Right. Can we go forward? This is again one more also, like what do you do as on 31st March, since you are not making the earlier journal entry, now you make the journal entry. Provision is a liability, expense, it cannot be an asset for me, debit should be charged off, it's a loss to me, agree na? Yes, expense account debit, provision account credit. That's all, whatever the amount you have subsequently lost in the judgment. Example number 4. Again, this is very simple, don't need to write this one, I mean to say, you can tell just like that. Done. Tell me, in the March month, we made provision for, yeah, maybe MIS purpose or something. Correct, na? Monthly information. You will give it to your parent company or investor, whatever it is. We'll do normal. In the private company, if it is my company, I don't need. Correct, na? But your company, some investor is there. Are you supposed to inform him what is happening? Yes. If it is especially foreign company, so it will be mandatorily. You will be doing MIS report. Perfect. So now as on 31st March, what did we do? We made some provision. We passed entry, power expense account 4 lakh, debit to payable 4 lakh. Done. But power bill will come on next day. Yeah. Next 1st April or 2nd, whatever. Some day, 5th April, we received the bill. Bill was telling it is not 4 lakh, 4.5, 4.75 lakh, it is telling. Now what should I do? Adjust it or not? Yeah, adjust. See, 0.75 is material, whatever the numbers given in the question. I say examination or I say textbook is always material, you should assume. Correct now. You cannot write, sir, I am assuming this is immaterial, that's why I don't want to answer. Correct. So that assumption doesn't work. Every number is material only. Whatever we give, every number is material. Understood? Yeah. So 4.75 lakh, 0.75, you make one more provision entry. Correct? Na? Same entry, adjust karo. That's all you are supposed to do. Power expense account debit 0.75. 2. Again payable, increase it by 0.75. Adjusting event. This is how it happens actually. You being an auditor also. Correct. Now what do you do? Tell me first. You will take all the provisions. Subsequently, when did you pay, my dear? Tell me. Correct na? Amount, date, invoice. If you out of those, we'll pick the samples also and you will check. Agree or not? That's how any auditor does it. You made a provision for this. Subsequently, huge amount you paid or very less amount you paid means why that provision is either understated or overstated. Adjust it. No. What exactly you paid subsequently is clearly telling that was your liability on 31st March. Not more or not less. Agree? Right. That's all. You are supposed to do. This is an adjusting event. Very simple example. Right? Yes. Next point. Now, look at this information. Yeah. Proposed dividend. This is a good one. Know it obviously, you people. Right? Let's see. As on 24-25, my financial year in all my examples. 25-26 is the next year. Correct. As on 31st March 25 related. Correct. Now, final dividend will be proposed when once the numbers are freezed, it will be proposed in the board's meeting. It will be approved by AGM, which you know. Agree? It will be proposed in the board. Approval or correct now. Declaration will happen at AGM. Correct. Now, which one I said? Board I told. BODS. Board of Directors meeting. Mein, what did we do? We proposed the dividend of 5 CR. Obviously, this is related to which year? Correct. It is not interim dividend. It is a final dividend. Final dividend is related to 24-25 proposed in so and so date. Correct na? In the Board of Directors meeting. Now, should I make a provision for proposed dividend as on 31st March or not? Yes or no? Unanimously or any other? Online? Yes. Do we need to make a provision? No. Why no? One word is it's a proposed. It's a proposal. Other party should agree, then only it will become liability. One way. Correct. Other way, one more way. Are we liable to equity shareholders on 31st March? Are we liable? No. Equity shareholders, that is my vision, will correct now. Board of directors, if even there is a profit, I don't want to give dividend to anybody. Agree or not? Reliance company gets so much of profit. Correct now. 25,000 crores, there will be profit. But they will give how much? Maybe 4-5,000 crores they will give as a dividend. Balance, yes, balance, everything is going to be correct. Infosys company, what they do? They'll give huge money. Buyback also they did. Why buyback they did? Recently, now 1800 rupees one share. Why did it buy back? You have a lot of money, they don't have a plans for the future investment. Correct now. So when I feel that I don't have a plan, I cannot make so much of expected return for you, then what is better? Well, better I'll give it to you. You go and invest in wherever you want. Right? So I am not liable as on 31st March to pay this much dividend. Exactly. So no obligation as on 31st March. One way is right. It's a proposal. It is not an agreement. Correct na? I hope you understood. Right. Still, as on 31st March is the right thing you need to think. What is the right thing? Are we liable to equity shareholders? No. Correct. We'll become liable to equity shareholders only in the AGM once it is declared. Till that time, I am not liable to anybody. Perfect. That's all. Right. Now I have a question. This much you will obviously will answer it perfectly. Correct. Is it a liability on the balance sheet date? No. Correct. Now that's why obviously, right. Dividend is a liability only when it is approved by the AGM. Correct. Yeah. Matching concept is not applicable for dividend. Is it applicable? Matching concept is related to P&L statement. P&L statements means income and expenditure. Matching concept you should think. Agree. For P&L expenditure income matching concept you think. Dividend is appropriation of profit. That's why don't say matching. This is 2024-25. No, it will not work out. Right. So you should not apply. Dividend is appropriation of profit. So it requires. But are you supposed to disclose in the financial statements? Dividend proposed. Proposed only. Yes. Dividend proposed. Are you supposed to disclose or not? In the board's report or in the financial statements? Schedule 3 clear requirement. Financial statements you have to disclose it. Schedule 3 clear requirement you have to disclose it. Okay, can you take this better? Right. While taking, think of this question also. I'll come back. Nothing to worry. What about dividend on redeemable preference share capital? Should I make a provision on 31st March? That also approval will happen. Procedurally, it will be approved. Right? Think of it while you're writing. Yeah. So tell me, my dear, what do you say with respect to preference share, redeemable preference share capital dividend? Adjusting in the sense, do you make a provision means adjusting. You do not make a provision means non-adjusting. Correct, na? Right. Do you need to make a provision or not? Why? Condition for payment is we'll get the information little later. Okay, fine. Right. Chalo. Yes, please. Sorry. Um, with respect to first thing, redeemable preference share capital, no? First, redeemable preference share capital, as I mentioned, very, very clearly redeemable. First question, correct. Na? Is it a liability or equity? Go by that route. Then clarity and the way you draft answer also will be commanding. Agree or not? Right. So that is what more important. First thing, is it a equity instrument or financial liability? Liability. Correct. Na? When it is a liability, interest is payable. Agree or not? The minute, see, whatever you pay, sir, I am calling it as dividend. I told you we don't go by the nomenclature. Correct? Now we go by the substance over form. The minute I account it as a liability, then immediately accrual works. Correct? Now that's all. So what is it? It is a liability. It is not equity. Correct? If it is equity, then dividend is a choice. If it is equity, dividend is a choice. If it is a liability, dividend is not a choice. I don't call it as dividend only first. I'll call it as a borrowing cost. So whatever the preference dividend, whatever you call, that is not a dividend, will account it. It will be accounted as interest you call, borrowing cost you call, finance cost you call. It is expenditure only. It is not going to be showed under the SOCIE. It will be part of profit and loss statement. Under finance cost, it will come. Are you clear? Right. Where will this come, my dear? Where will this come? You have to write this slide also, obviously, clearly. Correct. Now, this is part of P and L. Not SOCIE. No. It is finance cost. Yes. It is finance cost. It's part of finance cost. It always goes by the classification of the original instrument. If instrument is considered as liability, the outcome, whatever you make a payment, that is borrowing cost. If it is equity instrument, then we call the word dividend. Then it is appropriation of profit. Okay. In your agreement, in your language of mentioning me, it may be dividend word, you will write it. You write whatever you want to write it, but I'll go by substance over form. We treat it as finance cost only. So since it is a finance cost, you must have already made a provision as on 31st March. Agree or not? If there's an accrual accounting, you must have done or not? You must have done. Payment will happen whenever, that is secondary to me. So IND AS 10 only, concept of IND AS 10 only does not come into the picture. Correct. You already accounted. What is correct now? What is adjusting, non-adjusting subsequently? Irrelevant for discussion. Is this clear? Right. Just make note. First, if you use convertible preference shares, it is going to be equity. Correct. Now, right. So now question. Next question should be there. Whether the preference dividend is a choice of the company or is it a mandatory? If you say mandatory, then it is nothing but a liability. That means in the beginning, at the time of issue itself, we must have bifurcated. Then it is going to be liability discharging. That's all. So that time also it will not work. Correct? Yeah. It is linked. Whatever your question, you are asking, you are linking actually with 109. But doesn't matter. That's why I told first equity liability. Why I told you just few hours before, any instrument day one itself, first I identify. Equity portion is how much, liability portion is how much. I'll account it separately. I'll account it. This equity portion will go and sit under my equity share capital and reserves and surplus. Liability portion will come under the current non-current liability. It will come. Agree? Right. So liability, if you make a payment subsequently, that is liability discharging. Agree? It is not a creation of a liability. It is liability discharging. Right. Numerical things you will come to know in some time. Not in today, tomorrow. It will happen little. I'll remember your question. I'll recall your question also that time. 10%? Irredeemable. 10% are you 10% or 9%, whatever you call. You should answer me first. 10% is mandatorily payable or optionally payable? If it is mandatory means then that is, your instrument is also compound financial instrument. Why? Irredeemable is the word is irredeemable is with respect to principal. Right. Payable is with respect to dividend. Right. If you have collected 100 rupees today, this 100 rupees has some portion of equity, some portion of liability. Agree? Right. So how do I bifurcate? How do I account? Will come little later. This is very early stage for you to understand. It will go above. If I get into number, no, you will be facing the problems. That's why I don't want. I just want to give just a clarity of theoretical explanation I am giving. But whatever you asked, both of you asked, everything it's part of discussion. Okay, time is this is not the right time. That's all. See, what if it is cumulative preference share capital, non-cumulative preference share capital? Listen, there is no exact meaning for the cumulative, non-cumulative. End of the day, what is there in the agreement, right? You whatever assumption you want, take. That's why I told you call cumulative, non-cumulative. Cumulative means what? I don't pay in the current year, but I have to pay in the next year. Agree? Right. Non-cumulative means what? Current year, if I get a loss, I am not liable to pay you. Next year, if I get a profit, answer me. Are you supposed to pay for the last year also? Not required. Correct. Now, then doesn't accrue there. Doesn't accrue there. But these sentences in practical world may it will not come. Correct. So first question is, are we liable? Then it is a liability. That's all. Okay. It will go always by the words. Some places may they will use the word many agreements I have read with respect to cumulative, non-cumulative, something they will tell. But when you go deeper in the agreement terminology, what word they used on the top, it is exactly contradicting with below explanation. Then we need to have a clarity. Correct. Na? Are you liable to pay? Not liable to pay. If it is a liable to pay, then I'll create a liability. Otherwise, I'll not create a liability. That's all. Simple concept. 9:30, you will get a break. Okay. Done. Chalo. Have you noted? Yeah. Let's look at some more examples. Very important. Listen, this is a small example. All of you will answer just like that. Okay. In the February month, we started negotiating to acquire a company. Correct. Na? One company wants to acquire another company. It cannot happen so fast. Agree? Right. It will take some time. Maybe the other party is not interested to buy. We'll never go. We'll send our brokers or somebody. Right? The offer price will be important. Offer is very good offer. They may look at it. Okay, whatever it is. But have you got into some agreement or conclusion? Some deal has taken place as on 31st March? I have given information. No, no deal has happened. No signing. Nothing is done. No MOU. Nothing is occurred. Okay, but somehow, whatever the reason, in the month of April, we concluded the amalgamation. Our business combination is the IND AS terminology. What has happened in the month of April? Yeah, correct. What did not happen yesterday can happen today. Correct. Na? Anything correct. No? Little time will start thinking in different style. Agree or not? Sometimes you will also feel like, including me, you, everybody, at one particular time, na, we'll feel sometime, will I be able to do? Correct. Na? Exactly. Agree or not? We may feel like little down. Right? Actually speaking, no situation change happened. After some days, thinking style changed. Situation not changed. Do you agree with me, Alra? Practically, it's not related to subject, not related to FR, not related to anything. Situation was same. There was no improvement in the situation. But just our thinking style changed. You will feel more confident now. Agree? That means what is under my control? Thinking. Correct, na? And that's why what they say, you are under which association, although that is also important. If you have a good friend who can give positive lines to you, because our thinking style also can change. Because as the situation, this I experienced. Number of times I went back and saw. Yesterday I was not confident. Today I am confident. Is there a change in the situation? No. It's just only my thinking changed. That's very important. Okay. Chalo. Anyhow, concluded amalgamation or business combination. Now, what should I do? Is it adjusting or non-adjusting? But already discussion started in the past now. Huh? Correct. The conclusion not arrived on 31st March. Correct. As on 31st March, do I have control over that company? No. Then what is there to write? The control has come subsequently. Control was not there as on 31st March. I hope you understand. Job is done. It is purely non-adjusting event. It's a very simple basic example. I'm going forward. Okay. Right. One more example. Right. Look at example 7. Right. We have this also you will answer just like that. Okay. We have equity instruments. We purchased in Reliance share, that share, this share, something like that. Like, correct. Some Keynes company only will take it because significant difference suddenly. Earlier, Adani company had that issue. Right? Yeah, 4,000 and odd. I also bought few shares here. Suddenly it went to 1,000 rupees also it came. Seriously, it came. I bought shares at 1,000 also. I bought shares at 4,000 also. Okay, done. That's why. So we have equity instruments. As on 31st March 2025, we went by FETPL. Equity instruments always FETPL in general. It can go to FET also, but FETPL. Correct? Done. Now question. As on 31st March, what is the fair value? Fair value is equal to 1250. Okay. Then my balance sheet number, correct? As on the balance sheet, I'll record investment at market rate. FET, fair value, it will come. Agree na? Right. But subsequently, some news and some information on 31st March, what has happened? It went dhamal to directly 800. From 1250 to it went to 800. As on closure of the books of account. Now, shall I bring my 1250 to 800 or not? Is it adjusting or non-adjusting? Adjusting or not adjusting? It's very difficult to prove it is adjusting, right? You should, how do you say like that? The problem was already there on 31st March and it came out now. It's very difficult in the share market. Market may, it is very, very, very difficult. So subsequent reduction cannot be linked to the correct na, any position as on the balance sheet date. What is this? It is purely non-adjusting. It is a purely non-adjusting event. Our balance sheet will continue to be at 1250. Our balance sheet investment value to be continued to be at 1250. Will not account for the difference. This difference will come in 25-26 financial year. Is this clear? Right? Chalo. Right. Example number 8. Yeah, this is one good example. Right? You can answer, or there can be a possibility of little confusion, not much. Yeah. We received a check on 2nd April. But if you see the check, no, it's written like 31st. What is it written, my dear? 31st March it was. Somebody signed check on 31st March and he posted. I got the check copy on 2nd April. That's fine. 1-2 days. Correct, na? Delivery time bhi ho jayega. That's fine. Right. So 31st March 2025 was written in the check. Now, where should I account for this money? Huh? That is April or March. If I account in March, it is called adjusting. If I account in April, it is called non-adjusting. Agree? Right. You tell me, conclude. Why are you receiving? Postman gave what today? Huh? Receivable. Debtor received. Debtors. Debtors money. Some debtor gave me the money. Debtor gave me the money. He signed a check on 31st March. That guy must have accounted for I gave the money. Correct now. For him, it will be BRS number information. Right? But for me, it is different. I have not yet submitted. Nothing will come to my account. Yes, as on 31st March, if you want to record also, what do you record? Bank account debit? Correct. Now, two debtors you want to record, if you record. But when you want to say bank account debit, do you have control over that account? That as on 31st March, were you having at least physical check? No, you were not having. Correct. Na? It was not under our control. So how can I record it as on 31st March? There was no situation, there was no condition. Correct. Na? So if I had a check, I would have right to go to bank and deposit. That's why we'll record it bank account debit to debtor. When you receive the check itself, you'll record it. Right? Yes. So when to record on 31st March or 2nd April? Obviously, do we have a control over on that on the balance sheet date? Obviously, I don't have a control. Correct? The control only has come on 2nd April. I cannot book this asset as on 31st March. We'll continue to record debtor. Continue to record debtor. Is this clear? Right? Yes. This one you tell me. Suppose it is received by your employee. Suppose it is received by your employee on 31st March. Correct. Employee, who is employee? Our agent kind. Correct only. Na? It's like on behalf of a company only he received. He's an agent. So now when should I account? That's all. Which it is received by our employee, then 31st March only you are supposed to book it. Agree? Right. I want some two questions are there. Then I'll complete this topic and exceptions ko will go. That's why it'll take few minutes. Fine. Otherwise, again we'll have to come back and we have to continue the same topic. Right. Example 9. Look at this. Very important. 31st hmm, April 15th, we announced a restructure of the company. What did we do? Restructuring of the company. Restructure means it may be a merger, it may be a demerger, it may be anything. Okay, fine. So board approved on 31st August. It is not as on 31st March, my dear. It is announced on after April 15th. We have announced, and we announced for layoffs also. So say example, one factory is there, one division is there. I am closing the division. So the employees related to that division, I am telling bye bye. Okay, right. And I have given the money also. I promise something. I'm asking you to leave. I'll pay you some 3 months salary. When you are going, take 3 months salary and go. Extra. Fine. Right. So now promise to pay 50 crore rupees total to all the employees together. Example. Some number of number. Shall we make a provision as on 31st March? Is it adjusting or is it non-adjusting? Adjusting or non-adjusting? Sure. Non-adjusting. Why? We were not liable to employees as on 31st March. Correct, na? It binds me from which date? April 15. You promised to the employees on which date? April 15. So April 15th only will correct, na? Right, April 15th only will come. But is it a big event or not? Big event hai to are you supposed to disclose or not? That's all. It is non-adjusting, but since it is material information, should be disclosed in the financial statements. That's all. Disclose it in the notes, financial statements. Is this clear? Right. Example number 10. Now, look at this is very good question. I expect you will do mistake. Prove me wrong. I'll be happy. Okay. Right. Try. We have inventory. Inventory is measured at cost or NRV, whichever is lower. As per IND AS2 or AS2, number is same. Okay. Right. What else you have? You have some 100 cars in the finished goods. This is a finished goods. Car is there. Fine. So your 100 cars is there in the stock and valued at 4 lakh each. Why? Why 4 lakh means that day cost is equal to 4 lakh and NRV, whatever I'm just giving information. NRV as on the date of balance sheet 4.5 lakh rupees, whichever is lower 4 lakh per car 4 lakh. Total 100 cars like that I have it. Hello, understood? Situation clear. Now what has happened? Subsequently, after 31st March, we got some correct some information. What is that information? Government changes the rules. Subsequent. I'm repeating again. Anyhow, that's marking is also very clear. When is it happening? Government changed rules. What rules? High road taxes or penalties, something like that. Petrol car, diesel car, aisa something is there. You know, no? Right? Suppose diesel car value is down because they'll say like after 10 years only you have to scrap the car, something like that. Till then value of the car is falling down. It fell down from 4.5 lakh rupees was there in few months before. But after the announcement, car value went down to 3 lakh rupees. Assume. Just imagine any circumstance. Nothing wrong in this. Now, is it adjusting or non-adjusting? Think. If you say adjusting, what will happen? Backdate you are supposed to do. What is backdated you mean to say? Inventory will be measured at 3 lakh. Do you agree? First, I'm not concluding. I'm just telling. If you say adjusting, what will happen? Tell me. Inventory will be measured at 3 lakh. Because 4 lakh is cost, NRV will be 3 lakh if you consider it as adjusting. 4 or 3, whichever is lower, 3. Now tell me, is it adjusting or non-adjusting? Non-adjusting, sure. Right. I'll tell it is adjusting. Why adjusting? What condition? No, again, I want specific point. NRV. All right. Tell me, my dear. This NR, what do you mean by NR full form? Realization, when will it happen? When you sell. Correct. Now, as on 31st March, when you are finding NRV, what does it mean? I will get 4.5 in the future. Do you agree with me? As on 31st March, that is at the end of the 31st March only we are talking. Correct. Na? What is your estimation or expectation? 4.5 lakh I will be able to sell. Wasn't it an estimation or not? Yes or no? Right. But subsequent event is proving that your estimation of 4.5 is wrong. Yes or no? Then it is adjusting only. I am not changing the 4 lakh. I am changing 4.5. I am changing. Correct. Now, what it is that I said? 4.5, whatever I thought I will be able to realize. Anything fair value means when I sell, I will get this number in the future. That is what your estimation. But subsequent event is proving that your estimation is not correct because before closure of financial statements, I got to know. That's why IND AS 2, if you refer, when we go there also, I will explain once again. Their NRV concept will be there. Na? Their big question, I will take it for the same concept. Since it is both are linked, I wanted to test here first. Okay, right. With respect to NRV itself is an estimation that I will be able to sell at 4.5. But subsequent information is proving that your estimation was not okay. Then why can't you change it? You have to change it. Not your choice. You have to change it. Right. So sale of inventory provides an evidence about its NRV. Correct. So that's why you have to measure it at 3 lakh rupees only as on balance sheet date. I suggest you to mark it. Some triple star mark you are supposed to put for this. Okay. It's something little different from normal. Yeah. See, what is the fair value of this? 10,000. Right. What some X number? I don't care. Correct. Now, 10,000 you told fair value of my mobile. Perfect. But is it exactly correct? Is it an estimation? When will you get to know that it is 10,000 or below 10,000 or above 10,000? When you sell. When are you selling? Future. Future means you sold it for 9,000. What is it telling you? My estimation of 10,000 was not okay. If my estimation is not okay, then my accounting also will impact. Correct. Na? So I have to do measure it at cost or NRV. Cost is 4 lakh. Now NRV will become 3 lakh. 4 or 3, whichever is lower. So you have to go back and adjust it. Right. First you write it. I'll give you another side of it. I'll expand this question little more. First you write so that when if I write it on the screen, then you can correct. You can add it to the existing example. Yeah, one question from online. It is only adjusting if we sell after the balance sheet date. Yeah, obviously sell will happen after the balance sheet date because you have stock on 31st March means it will be sold after balance sheet date. Or if you get information after the balance sheet date that NRV is 3 lakh, then also it will be same effect. Yes, because market situation is showing that cars values have fallen down, so you will be able to sell for 3. Then you have to record it at 3. Done. Imagine one circumstance, okay, maybe while writing also, 100 cars you have, 40 cars I sold before the announcement for 4.5 lakh, 60 cars were not sold till the date of announcement. Now, how will be my inventory valuation on 31st March? Have you understood? Because announcement is not happening on 1st April. Announcement is happening during the period. I hope you are understanding. Whatever I gave you, that is what practical. What is here is only theoretical. I repeat my question. You have a stock of 100 cars. Situation on 31st March, 4 lakh, 4.5 lakh remain same. This announcement happened on 1st June. Let's take one date. Before 1st June, I already sold 40 cars. For 4.5 only I sold. After announcement or as on the date of announcement, I am left with only 60 cars. Now, what will be my inventory valuation? I'll write the same thing on the screen. Once are you done with this? Yeah. Yeah, first copy, you copy, then I'll continue the example. This is example situation 1, like that you write it. This is situation 1, you write it. Under example 1, example 10, situation 1. Situation 2, I'm adding. Huh? When I write, you must have understood already, but still I want to tell. If you have really understood this line correctly, you will answer me correctly. On 40 cars, you should measure it at 4 lakh. On 60 cars, you will measure it at 3 lakh. Because subsequent event, sale is a subsequent event. I sold 40 cars for 4 lakh rupees. Why should I bring it to 3 lakh rupees as on 31st March? Agree or not? 60 cars only I will be selling in the past, or which must have sold afterwards also at for 3 lakh rupees. So my inventory valuation will be 40 into 4 plus 60 into 3. Is that clear? Right. So I'm taking the small example. Right. So what is that? As on 31st March 2025, this is example number 10, situation 2. Okay. Yes. As on 31st March, what is the stock, my dear? Stock is equal to 100. Out of this 100, say announcement happened on 31st May. 31st May announced. Correct. So if I sold 40 cars in this period, right? Maybe 31st August is my closure. 31st August is my closure of books of account. Correct. So assume now you sold 60 as an assumption. 60 are all sold also, not sold also. Assumption already announced, after announcement value has fallen down. Right. So 60 cars sold in this period from 31st May to 31st August. So now how should I value? With respect to 40, I should first calculate. Cost is equal to 4 lakhs. NRV is equal to 4.5 because cars sold at 4.5 lakh rupees each. Here you sold it at 3 lakh rupees each. So with respect to 60 cars, what is my cost? Cars is equal to 4 lakh. NRV is equal to 3 lakh, whichever is lower. Right. So with respect to 40 cars, I will take 4, which is equal to 1 lakh, whatever it is, 16 lakhs, 160 lakhs. Yeah, 160 lakh. And here what do I record? With respect to 60 is equal to 3, that is equal to 180 lakh. So 160 plus this is equal to 3, 340 lakh. 340 lakh rupees is inventory value on 31st March. 340 lakh. I hope it's clear now. Yes, you have a question. Hmm. No. So his question is, I'll repeat his question. He's saying like cars I had the car as on 31st March. Correct na? Now some fire accident happened in his dealer's factory stock, some fire accident happened. So car became scrap now. Correct na? He sold on kg basis now. Assume whatever it is, lesser value. Now, is it adjusting, non-adjusting is his question. Purely non-adjusting because condition you have to look at. Okay, condition of it was as on 31st March, car was in a good condition or bad condition. Same condition car only sold on after 31st March. Condition changed, that's why the value is changed. So this is not relevant to 31st March circumstance. Okay, and one last question I'll take from this. Okay, sir, it is one question from online. Sir, it is only adjusting. If we sell after, I think answered this is, yeah, right, it's clear. Done? Chalo, take break for half an hour and come back. Yeah, chalo, let's start. Now, there are exceptions. There are two exceptions to this rule. Okay, right. And after exceptions, there is one small point is there. This is I mean, this is actually not related to IND AS 10 alone. It is related to IND AS 1. 1 has to be read with IND AS 10. That's why I want to close it here. Okay, when I'm teaching IND AS 1, I'll not teach that. I'll teach it here completely. Yeah, anyhow, all of you know what is current, non-current liability. That I don't need to tell. Okay, everybody can tell like above 12 months, below 12 months, current, non-current. So that's linked to that current, non-current liability concept, linked with events occurring after the balance sheet date. Okay, right. Anyhow, first exceptions will clear it. What do you mean by exception first? What do you mean by exception? Now, general in the given circumstance, try to read that way. What do you mean by exception? Okay, this is exactly ulta what you told. Doesn't apply to, correct na? It doesn't apply to means strictly speaking, it is a non-adjusting event. What I say? Strictly speaking, non-adjusting event. But exception means even though it is non-adjusting event, I'll treat it as adjusting event. I'll book that. Strictly speaking, it is non-adjusting event. But even though it is non-adjusting event, I'll record it as adjusting event. That is what. Even though it is a non-adjusting event, it will be considered as adjusting event and will be accounted as on the balance sheet date. That is called exception. That means there are two circumstances like that. One is subsequent event affecting going concern assumption. Yeah, when the going concern assumption gone, after 31st March gone. When is it gone? After 31st March actually gone. Not as on before 31st March. But still, we'll prepare it at NRV considering because this is exception rule. Strictly non-adjusting. But still I'll consider it as adjusting. Okay. When is it before completion of financial statements? I mean board of directors approval. Before board of directors approval, we have a significant doubt on the going concern assumption or there is no going concern assumption, conclusion has taken place. Still, I'll consider it as going concern assumption is not there as on 31st March only. I'll assume it and I'll account for it. I'll do disclosure. I'll do everything. Okay, right. So there is a carve out also is there one more circumstance that we'll speak in the next slide. So can you just make note of this? It's hardly 2 lines. We'll take some examples related to going concern assumption. Okay. Generally, they'll play with the wordings. A language, if you don't read it correctly, then your answer may go wrong. Okay. That is the only problem. So example 11, if you see 24, the timings are same. Suppose in our premises only major fire broke. Okay. After 31st March, it has happened. We lost everything, nothing is there to restart. Okay. Right. So first question, you don't conclude. Generally, the problem now what happens unless until they tell very clearly. Otherwise, you don't conclude that going concern doesn't exist. Are you getting my point? Right. So if you don't not sure, then you should think both the sides. Then write the answer for both. Write the answer for both. It will be maximum 1 or 2 lines extra. If you conclude one side, there is a possibility that they'll take other opposite side also, and you will lose mark unnecessarily. Correct? So you lost everything. It's not covered by insurance. Huh. When they give the information that it is not covered by insurance, so that means very strictly said, I don't have money to restart. I lost everything. I don't have insurance money also will not come back. So then going concern assumption is affected. When is it affected? After the first March. Strictly speaking, what it is? Non-adjusting event. Correct, na? But still, is it an exception to our general rules? Yes. So going concern assumption does not exist. Also, still we should consider that such fire accident happened already on 31st March. And then you account for. Correct. Here also you are supposed to calculate at NRV. NRV means correct. Full form to net eligible value. Right. But that net eligible value before fire you will take, after fire you will take. After fire, what was the value, real value? That value should come into the balance sheet date. Have you understood my point? Suppose one building is there or one car is there. Okay, fire accident mein car lost. Nothing is left. Got it? In the books car value is 4 lakh as on 31st March. After fire value is equal to 0 or say 10,000 otherwise just for a number. So NRV is 10,000. So now as on 31st March 2025, my car value should come down to 10,000. So normal depreciation rules and all will not work there. Directly bring it to NRV. Any gain or loss hit the profit and loss statement. Are you getting my point? In one company, some Delhi based company, as part of some restructuring of their business, what they did, like they wanted to open one company in US and they want to open one more company in India. They wanted to make this as a subsidiary. Like somebody gave a suggestion like you can open actually US company and ask that company to purchase the 100% shares of this company. I don't know, some restructuring advice given by some other party. So they are closing this existing company. Fine. And they'll start one more company also. The two companies will start. One in US, one is in India, like this. Some regions are there, which I also may not be able to tell right now. Okay, right. So now the old company which is going to be closed, board of directors have passed a resolution in the month of July saying that we wish to close it. We wish to close it. And they already filed an application in the MCA saying for liquidation. Getting my point, voluntary liquidation, we are closing it. Now, how should I deal this? Is it very clear that we are closing the company? Yes. So, going concern is a problem. Right now, you are signing 31st March 25 ka financial statements. So, now how should I prepare my 31st March 25 financial statements? At NRV. On liquidation basis only you are supposed to prepare. Yes, your audit report, some drafting of audit report will change. Financial statements also you have to mention under the correct agenda. Otherwise, what you write, we are preparing undergoing concern assumption, like one line will come under the before accounting policies. Correct? Right. There also some information has to come. And in the notes to financial statement, better to give a separate note saying that this is what the incident happened. Board of directors have taken a call. All that information you are supposed to disclose. Disclosure is also important. Accounting also must have already happened. Done. So now consider it as adjusting event. There is no going concern assumption. Even if even if it is a non-adjusting event. How to account? You should account for all assets and liabilities at NRV as on 31st March 25. Whatever the gain, loss, transfer it to profit and loss statement. So now mutual funds you had. It will come at what number? Fair value. Correct. Now accounting standard may this is same concept applicable for accounting standard and this one. Correct. Na? Right. It will in accounting standard as per accounting standard 13 will follow cost or fair value whichever is lower. Correct. Now in this circumstance what will happen? It has to come to fair value. In days may what will happen? It is already at FETPL. It is already at you must have already brought it to fair value. Then there is no problem. Other assets something you need to take out. Got it? Is it clear? Right. One more step I'll take. I'll come back. You can copy that time. Suppose major fire broke. That much information only given in the question. They only told major fire, but they didn't say anything about the other information. Now, how is your answer? Here you have to be careful. That's what while reading the question, if you read it carefully, you can answer also carefully. If you just rush through, na, then the problem will come. Got it? So no further information. You have to write diplomatic answer. Write both. Major fire broke. Right. If you feel that there is no other way to restart the company, no other way, then you please say going concern doesn't exist. So follow NRV method. But if there is an insurance or some other situation is there, then correct na. If the other than my, I mean, there is a going concern assumption. If you assume this is purely a non-adjusting event, since you said it is major, disclosure should be given for the loss and etc. in the financial statements. Hope you understood. Right. Major fire broke, insurance coverage exists if they give by chance. Insurance coverage exists means do you get insurance money? Assuming yes, we'll get the insurance and so that we can restart the business. Correct? Then that time you'll assume this way. It always goes by the language of the question. Got it? You have to carefully read it. Correct, Nanda? They can frame the line in their own fashion. That's not under our control. But if you have the concept clarity, you can handle it smoothly. Right? You don't right. Always think like, can I go do this or that? Such doubt comes, write both. Correct, na? Instead of taking one side. Hope it's clear. Right. So I want you to write this portion and the next portion. And then we'll enter the main crux, some difference I told, no, India is 10, India is 1 to India is 10. The next slide, what we talk, no, you need lot of your attention. Okay, focus. Otherwise, discussion is like current liability, non-current liability. With slight difference, current will become non. And answer also will go wrong, obviously. Got it? Whatever you explain in your logic, no, end of the day, answer is wrong means obviously logic also wrong. So no discussion, directly 0 mark will come. Okay. So, and was it tested? Yes, tested 3 times, if I remember correctly. Right. 3 times tested for 6 marks to 8 marks that was asked in the exam. Okay. I made one small chart kind like where you need, I mean, decision making table kind, something like that. If this is this is the answer. Like I made that also. You have to document that also in your notebook. Fine. Right. Shall we start? Yes. Focus, 100% focus is important. This is a carve out. Carve out means what? We have taken a separate stand from IFRS. Carve out means different from, right. IFRS is going in one route. I have taken a slight different route. That is carve out. Can you write somewhere? Carve out. Yeah. IND AS has taken a different stand. IND AS has taken a different stand from IFRS. Different stand from IFRS. Okay, right. Listen now carefully. So on 1/4/2025, listen, don't write. I'll give time to copy. Fine. Just focus. Your mind 100% should be here. Fine. You have taken a 10-year loan. I'll ask you so many small questions in between. Please patiently answer. Right or wrong are secondary, but you answer first. 10-year loan I have taken. Long-term loan of thousands here. Okay, long term means a 10 years you take it. No problem. On which date I took? 1/4/2025 I took. Nothing. Fine. So there is a covenant. Covenant means conditions. Correct. Big loans will have always some conditions. What condition? Frankly speaking, I gave a loan to you, right? And I said 10-year loan. Then you will get a right to ask me after 10 years. Agree or not? Suppose if, correct, na? If my company is going down, 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 now you will come and ask, your company is going down, so you pay me. What did I tell you already? 10 years बाद में. अरे 10 years बाद में, if I come, company only may not be there. You got my point? Because it's a long term and huge amount, na? That's why they'll always keep condition. What is the indication? Suppose your ROI is falling down, return on investment is falling down, some circumstance is there, correct? Na? Debt structure is something wrong, whatever it is. Then he will get immediately right. He can come and sit at my place and say, now first pay me, then do whatever you want afterwards. Got it. That's why covenants means conditions will be kept. Now listen. What is this condition? This condition is with respect to return on investment. Return on investment per annum every year, minimum 15% should be there. Equal to or greater than 15%. Agree? If you don't satisfy this 15%, lender will get a right to ask immediately. Clear my debt first. Have you got my point? Right. If he get the right to ask, then my liability will become current or non-current. Huh? Correct, na? Suppose I made 17%. Then it is correct. I made 14%. Correct. Are you clear on this? Perfect. Now listen. If it is not satisfied, the banker or lender has a right to ask for repayment immediately. Clear? Okay, perfect. So there is one particular year. Okay, that is after 2 years. 31st March 2007 has come. Assume numbers. Done. So after 2 years, what is the position? My ROI has become 14%. So strictly speaking, what is it? As on 31st March, is it a current liability or non-current liability? Yes, 100% it is a current liability because banker get the right. When he gets a right, I don't have an option to defer it. What did I say? When you come and ask, correct? You have a right. Whether you want to come, do not come, you have a right. But when you come, do I have a right to defer it? I don't have a refer to right. That means what? Payable immediately. Payable immediately. Correct. Na? Company has an obligation to fulfill. Strictly speaking, so it is a current or non-current liability. Current liability. Anyhow, you rightly answered. Now, what has happened after 31st March? Incident happened on 31st March. After 31st March, we went and approached the banker. We requested, Arey boss, this is some circumstance. Because of this is Trump effect. Trump only will leave after some time. Okay. Something, some kahani we told her, we proved it. This is some extraordinary circumstance happened in the current year. But extraordinary event is not like repetitive in nature. Something we went and convinced him. What you did? Convinced him, saying, please don't come. And that guy also tell, okay, no problem. I'll ask you after 10 years only or whatever it is. Next time only I'll ask, not now. Are you getting? I'm forgiving this. I mean, I'll not bother about that. There is an incident happened only. I'll forget about this. Karke, he'll tell like that. Are you getting my point? Right. On 30th April, we management discussed with the banker, convinced it to pay as per the schedule. Say that is after 10 years. Agree? Right. When is the discussion happened? Answer me. April. Correct? Right. Now, is it as have you closed the financial statements? No. 31st August our date all the time. Okay, na. Now tell me, as on 31st March 2025, should I disclose our presentation current or non-current? First, okay, before you answer, if this situation happened, subsequent event, is it adjusting, non-adjusting? If you say adjusting, loan will become non-current. Adjusting means what? As if discussion happened on 31st March, you should assume. Hello, understood? Yeah. He has forgone his right. on 31st March. That means he'll come only after 10 years. That means it is non-current. If you say non-adjusting means it will become current. Is it clear or confused? Confused. Clearly confused. Clear. Okay, fine. Fine. I can repeat. Not a problem. This is always challenging. Thoda. Okay. Right. That's why slowly think. Aram se answer. Then correct. Then only you will be able to write it properly. Otherwise, you will not manage in the exam. If you say adjusting means just keep it in mind. It is not happened on 30th April. It happened on 31st March. If you have met the banker on 31st March, we convinced him and he said like, no problem, Ravi, I will not ask you. Means he has forgone or excused, waived his right. He lost his right to ask. Actually, he had got a right, but he lost the right. He lost the right means when will he ask? After 10 years, whatever, a long time. Correct now. Then it is going to be non-current. But actually, as on 31st March, tak, till the date of discussion, till 29th April, tak, had the banker has a right to ask you on 31st March, can he come and catch me or not? Yes, he has a right. So, strictly speaking, it is a current. The discussion, everything is happened is a subsequent event, purely non-adjusting event. It's purely when did banker lost his right? 30th April. Correct, na? Agree or not? Right. So, situation, this is a pure, this is nothing related. It is not changing the right of 31st March. He is losing the right on 30th April. Prospectively, he will not ask. I hope you understood. Correct. So, strictly speaking, it is a non adjusting event and the loan should be accounted as current. The loan should be accounted as current because banker had right to ask us money immediately on 31st March. He has forgone the right only later. As on 31st March, he had the right. Correct, na? Right. Now look at. So, is it adjusting or non adjusting? Non adjusting event. Correct. So, if it is a non adjusting event, that's what we lost the right after the balance sheet date. Strictly speaking, what it is? Current liability as on the balance sheet date. Agree? Right. Now, listen the carve-out you listen. This is what IFRS says. This is right. But India may what we have taken as per. Again, how many of you writing in May 27 or afterwards? 27, 27. I told correct. May 27 or afterwards. Whatever I am telling, no, that is not applicable to you. That's why. Yeah, May 27. May 27, the carve-out is there. Till January 27, carve-out is applicable. Are you getting my point? May 27, they are removing the carve-out. Now they are making it in line with IFRS. Understood? May 27, people can close years. Getting my point? This till this level, perfect. This IFRS may whatever they said. India, what they said, India may these things are normal. We'll treat this as a adjusting event, we'll take it. Then if you take it as adjusting means what will happen? You should assume that discussion happened on 31st March itself. People have agreed it. Then I am not liable to pay. He lost his right to ask no. Then what will it become? That's all. Have you understood? Not too much confusion, but okay. But try to understand this point. If your attempt is January 27 or before, whatever I am teaching, the carve out exists. Simple. If it is afterwards, carve out does not exist. That's all simple. Nothing else. Okay, we will be in line with IFRS. Shall we go ahead? Right. One second. This is, I think, slide problem. I mean, my placement issue. Right. What is a carve out? Now carve out. Even if it is a non-adjusting event, carve out means what? Non-adjusting event will be considered as adjusting event. If it is a adjusting event means as if the banker accepted to lose the right on 31st March itself. Under that circumstance, it will become a non-current liability. Okay, this slide will not be there for May 27 people. May 27 and onwards. Is it clear? You people, May 27 people, don't take, cautiously ignore this slide. Is it clear? But in the textbook, it will not be there like that. In the textbook, it will be obviously. Got it? Right. Be careful. This is what you are writing. You mark it. This is like this. I hope you understood. Yeah. So as per IFRS 10, non-adjusting event only. That means it's still current liability as per IFRS. So 27 onwards will be at par with IFRS. Clear? Right. Now, one small thing. Can you make a note of this first? Don't, if it is May 27, carve out word also don't write. Okay, May 27, carve out word also don't write. Just like an example, you write it. This is one more example. That's it. Tell me question. Huh. Agreement is 15%. Means you have to earn 15%. If you are earning less than 15% means what? Some problem with the company investment. So you are earning less than 15% means I'll get a doubt. Something wrong going on. You may not be able to repay me. So then I'll come and I'll collect my money first. Later you go wherever you want. Okay. So in particular year they earned only 14%. That means their performance is down. When you don't earn 15, then I'll get right to collect my money back. Like that. Can we go ahead? Yes. I'll show that next to next slide. Then we'll come back to one. I mean, my placement of the slide was wrong. Okay. That should have come afterwards. Will we? Yeah. This I told you, right? Only if your attempt is before May 27, Jan 27 or before. Hmm. Condition does not exist. That is only the point. Actually, condition does not exist on 31st March. No, it is the condition you had to pay as on 31st March. That condition is deleted after 31st March. Not different condition, same condition deleted, forgone by the banker. He lost his right. Can I go ahead? Yeah. Now, I mean, this question on this concept, na, on this concept, I told na two times question, two or three times question has come. Which year and all, I already mentioned in the textbook. Same concept, you will find that. Fine. Right. One more is there. Right. I mean, very basic, but sometimes students do get confused. Why, I don't know, but it happens. Right. That decision framework, something I have written, that if you understand, observe, just go by that. Perfect clarity will be there. That's it. Right. Yeah. So when, yeah. First question, what is that? Breach of material provision means condition. On or before the balance sheet date. When did it happen? First question mark. Don't link it in the earlier question. In general, I am telling. Okay. Breach happened when? It can be on or it can be after. So my correct now. On or is it happened on or before? Answer can be yes. Answer can be no. Huh. So first, what is the question? Breach of material provision on or after the before, on or after? Before balance sheet date happened. No, no means what? After it has happened. After 31st March, breach took place. So now look at no. What will be your classification? Adjusting and non-adjusting is secondary. Current and non-current you tell. Breach of the provision has happened not as on 31st March. After 31st March, breach happened first. Will it be current or non-current as on 31st March 25? Breach means some condition we kept to, not this 10% or 15% wala, something else. I ask you to, I mean, your debt equity ratio should be this rate, this much. I'll say 3 is to 1. 3 should be debt, 1 should be equity. Debt cannot be increased further or something like that. I'll kept. But you issued a debenture subsequently. You percentage ratio changed. When the issue has happened, April May issue has happened. Can it happen? Yeah, debenture issued that day, breach has happened. Now, but I am talking as on 31st March. Now, is the question clear? All of you? Right. Now, how do you classify as on 31st March loan? Non-current or current? Non-current. As on that day, 31st March, whether banker has a right to come and catch? Because breach only happened later. Which day breach happened? That day right comes to the banker. Do you agree? Any confusion? No chance, actually speaking. Correct, na? So it is going to be non-current liability. Very clear. If it is yes, further question is there. Okay, right. Further, what is the question? Lender agreed by balance sheet date to a grace period of 12 months from the balance sheet date. Read once again. Lender agreed. What is he saying? First of all, when I say yes, yes means what? Breach happened on or before. Agree? Yeah? Right. Breach happened in the month of March or March 31st. It has happened. Correct? Now, what lender agreed? To forgo. Not only forgo, and what did he say? I will not ask you money. Correct. In the next 12 months. That answer can be yes. Answer can be no. If you say yes, it is going to be non-current liability. Correct? Na? If it is no, I will ask for one more question, then we'll conclude this. Right. Yes, go through that. What is the next condition? Lender agreed to waive off after the balance. Here, first one is agreed on the balance sheet date. First above one is agreed by means, this by means on. On the balance sheet date itself, he agreed. Suppose you have, what is that? Condition you have not satisfied on March 1st. Before March 31st only, my banker also agreed. No problem, chodo yaar. I will not ask you for next 12 months. From the balance sheet dates, next 12 months, I will not ask. Then it is very clear. Is there any problem? Any slightest doubt, if you have also, please ask. Don't postpone the doubt. Okay, right. You have, what is that provision co? You have not satisfied on 1st March. Before 31st March, we spoke, cleared. As on 31st March, banker does not have a right to come and catch me to ask within 12 months. Understood? He told, I will ask you after 12 months. Then it is purely, clearly non-current liability. Agree? Now, one more question. What is the question? We have broken the condition on or before 31st March. Am I right? We have broken, not satisfied the condition, whatever you say, covenant is not satisfied on or before 31st March, but banker has not waived off as on 31st March, banker waived off after 31st March. Correct? Now, what did I say? Banker waived off after 31st March. Now, look at, now, right, it can be yes or no. What is the sentence I read again? Lender agreed to waive after the balance sheet date, but before the financial statements approved, it has happened. This is IND AS 10 carve out. Okay. Yeah. Now, if you look at S situation, I am looking at S. Yes, he agreed, and he will ask me for after 12 months I need to pay. Correct? Na? Right. Then under that circumstance, it is going to be non-current liability. If it is not, then it is going to be current liability. Is this clear? Can I ask you one more question based on this? Right? I'll ask you. You copying that, then just don't worry about it. We'll come back and we'll copy. Right. We took a loan in the month of December 2021. Okay, of 100 CR. Covenant by 24th March 2025. Promoter also, okay, also should contribute 100 CR. We took a loan from 100 CR, but we have given some time. Promoter also has to contribute. By 24th March itself, you are supposed to contribute. This is the condition. Okay, covenant is this. Promoter also has to bring the money of 100 CR to me. Not got the contribution from the promoter in time. Now, facts I am giving. By 24th March, he did not get the contribution. Correct. Now, have you broken the covenant before 31st March? Yes. Right. Now, the debtor, I mean, the lender has a right to catch you. Correct. Now, pay me my money first, karke he can ask. Now, approached banker on 25th March. Next day only we went. And we got a grace period for 30th June. Means what? Banker will not, he has got a right on 24th only, but he said, okay, 24th I will not ask, 30th June I will ask. Agree or not? Yes. That is the meaning, na? Understood. During this period, banker cannot ask for remove. Yes, I only gave the grace period, so I will not come to you for this 3 months, whatever is the time, I will not come. Agree? Done. So now, what is the classification of the loan as on 31st March 25? Current or non-current? Think, and I'm not in hurry. You also don't be in hurry. No. Is it current or non-current? Even if it is that situation, whether the banker has got a right till 31st on 31st March, he had a right. He just postponed it to 30th June. 30th June is nothing but less than 12 months time. 30th June is less than 12 months time. He just shifted 3 months later. 3 months later is still less than 12 months from the balance sheet date only, na? Correct, na? If somebody told non-current, on what basis you will say non-current? Hmm. But I have not given any information. As on 31st March, correct. But as on 31st March, banker has a right to ask within 3 months. ये तो सच है ना? Agree? Any question? Can we conclude as current? If it is next year, where is the discussion? If it is 30th June 26, if I say, then you have a period for more than 12 months. Na? Discussion closed. Agree, na? Right. That's all. It is current obligation or current liability. Agree. Now, one more question. Suppose non-compliance took place before 31st March and the entity can defer only for 3 months. That is answer I told, less than 12 months. Karke I closed it. Now, assume they approach the banker in the month of Jan. Situation, another circumstance, independent from earlier. Don't link these two. Before Jan only I went. I asked banker, बस आपका डेट क्या है? मार्च 24 है. हम एक काम करेंगे, डेट शिफ्ट करो जून को. You understood question first? ओल्ड एग्रीमेंट में व्हाट वाज रिटन मार्च 24 लिखा, करेक्ट है? मार्च 24 कट करो, कट करके जून 2025 लिखो, 30th June 2025 you wrote, correct है? Now read the entire agreement. How does it look? Promoter has a right to promoter has a time to bring 100 crore rupees money by June. If June में नहीं किया तो banker get the right. Do you agree? Understood circumstance? Now 31st March तक मेरा person नहीं लाया पैसा. My promoter has not brought the money. My promoter has not brought the money as on 31st March. Hello, understood? Yes. Now tell me, what is it? Current or non-current? Non-current. Bank, you cannot say within 3 months. Bank will ask, no, I have not defaulted only, na. I have not breached first. Breach only did not take place. Is it clear? I hope you understood. Any some small point of confusion? No, that's all. It is non-current, as you rightly said. That's it, yeah. Sometimes people get confused. Why? I don't know, but they get confused. Got it? Right. So, in the next 3 months, my person can bring. On 31st March, banker do not have a right to ask within 3 months. He get the right only subject to contingencies after 31st March. That means he doesn't have the banker does not have the right to ask only. This is good instead of before after making the problem and going correction. Before if you are expecting that something is going to happen, go before only and close it. Fine? Yes, please. Huh. Another question. Yes. Huh. Correct. If right. Okay. Her question is it is continuation to this question. First question. Continuation to first question. What is her question is in from the March to June. This is March. This is June. If our people bring in the money, how do you classify as on 31st March? Tell me. Still current. Because money brought in is a non-adjusting event for me here. Correct, na? Money brought is a non-adjusting event. If he brings the money in between 24th to 31st, then different. 24th to 31st already brought in. So, banker do not have an option to ask. Agree, na? Satisfied. But if he brings money after 31st March to June, that is a subsequent event purely. Agree? Right. That's different. Subsequent, then you can do different. Hope you understood. Right. Now you write what you want to write. This is agreed on, you write. Agreed by means obviously on only, but to make it straight. Right. Let's read this question number 11. A company manufactures and supplies the supplying the process control equipment is entitled to. It is entitled to what? A duty drawback. Okay. Duty drawback means what I said? Custom duty, whatever you paid, you will get back. First, you have to pay custom duty, then get the goods inside the country. Then satisfy the conditions and go and fill the application and submit it to department. Then they will give you the money back. Okay. Right. So if it exceeding the turnover base, that is. To claim the duty drawback, the company needs to file application within 15 days of the meeting the specified turnover. Okay. Yeah. Once you cross the turnover, then within 15 days you have to submit the application. If the application is not filed within the stipulated time, the department has a discretionary power of giving duty drawback. Right. Now the power goes to the officer. Are you getting my point? If you do within 15 days, you have a right. If you file, you can still file the application. After 15 days also, you can file the application. But now if you file the application after 15th day, power is with the officer. Right? Now, that is his discretion, left to his discretion. For the year 2021-22, X, you can keep 2 or 1, whichever you want. That's why X will keep. Otherwise, every year I have to change that. Correct? Every year looks like old question or something. That's why I say also bring like X only they'll keep. 21-22, the company has exceeded the specified limit of the turnover by end of the reporting period. But the application for the duty drawback is filed on April 20th. So 15 days crossed. Power is with officer, which is after the stipulated time of 15 days of the meeting the condition. Duty drawback has been credited by the department of June 20th only. They got the money. I mean the officer approved, money also came to my bank account. Correct? Done. And the financial statements have been approved by the board of directors on June 26th approved. There is a 2 days again gap here. This is July, correct. Financial statements are done afterwards. Means before financial statements are approved, duty drawback also has come. So now, whether the duty drawback credit should be treated as an adjusting event or non-adjusting event. Adjusting, non-adjusting. Non-adjusting. Why non-adjusting? First of all, as on 31st March, were you having a right? No. Correct. No. You filed the application also later. That was his decision. His decision was to give the money on June 26th. Till that date, you were not knowing that you were entitled or not entitled only. Do you agree with me? But subsequently, information has come or not? Right. This standard should be linked with our upcoming standard IND AS 37. IND AS 37 talks about provision, contingent liability, contingent asset. Can it be a contingent asset? Yes or no? Correct. No. We have submitted. Subsequently, information also has come. It's like a contingent asset as an subsequent information is proving that I have got it. But I did not have a right to ask for. Correct. No. Even though you are satisfied, you have not submitted the application within the time limit. Right. That's what the answer. This should be read with IND AS 37. That is only provisions and etc. etc. As a company did not file the application, there is no virtual certainty of receipt of the duty drawback as on the balance sheet date. We did not have right. Virtual certainty is secondary actually. You did not have right to ask. Decision is depending on other party. The receipt depends upon the discretion of the authority, which is a possible asset. Correct. It is a possible asset. That's why I said it is a contingent asset. Hence, it should be disclosed as a contingent asset to the right. And when are you supposed to record? It is you write it here, non-adjusting event. Okay, record in 2020. Which area? 2, 3. Non-adjusting event. If you are carrying the book, fine. 22, 23. Is it clear? Any question? Right. Last question. I think this we answered already. ABC Limited is trading. This is related to same cars. I told no example. Car placement laptop has come. That's all. Nothing else. Nothing else is there. I don't think so. I left something significant. Fine. Right. You can, in case when you look at the textbook or look at ICAA book or something, na, if you get to know, sir, this is something different question, something can't we discuss in the classroom? Yes, you please message or please tell me. You guys can come and speak to me. Online people can message, sir, this question is something little different, right? Please, why not? We'll discuss. That see tomorrow. IND AS 37 will start linked. Then we'll go to IND AS 8.